So, guys, we are live now. First of all, tell me whether my audio and video is clear to all of you or not. Please tell whether my audio or video is clear to all of you or not. Yes, sir, clear. Mhm. Okay, so hello everybody and welcome to this full English CA Final Direct Taxes and International Taxation Power Batch applicable for Jan 26 attempt. First of all, keeping everything aside, I want to know how you all are doing. Whether doing great, whether having smile on your face or not, first of all, that is the prerequisite of this batch. Just let me know. Meanwhile, let me slowly and steadily introduce the subject, introduce the power batch, and certain important features that we must be aware before starting of our batch. As you can hear, this batch will be in complete English. That means I would try not to use even a word in Hindi. Is that clear? Yes, sir, it is clear. We have with us Neha, we have God's Child, we have Vigilit, we have Kishore, we have Rahul. We have many people joining. A very warm good morning to everybody. First of all, sir, how long this batch is going to last? See, if I am asked number of hours, I can commit number of hours are going to be 75. We can have plus minus 5 hours, but that is maximum that is going to last, which implies this batch is going to be of 19 to 20 lectures. Sir, 19-20 lectures? Isn't this too much? No, it is not. See, for a subject like DT, which is very vast in nature, and we want to concise it to the smallest possible time, then 80 hours is the minimum that you must give. And this 19-20 lectures are not just small lectures, we will understand over the period, but remember, this is time in which we will be able to cover entirety. So, sir, how you are going to cover? We have material of other faculty. Are you going to skip out any topics? Right answer is no. Let me tell you everything. Sir, I will be covering 100% concepts. 100%. Sir, A category topic or B category topic? No, sir. A, B, and C category topic. Every topic I will be covering. Sir, how you will be able to cover every topic? See, according to me, you cannot skip out C category topic, at least at CA final level. You need to have knowledge of every topic, just that you can give lesser time to certain topics. Like we have certain topic like clubbing and set off, which have never been asked in exam. So we'll give less time, but we cannot skip it out. So our aim with this power batch is to give 100%, we understand 100% topic despite of category. We cannot skip out any topic just because it is a C category topic. It might come in exam even for 2 marks, 3 marks, and every mark matter in exam. Sir, we got that. Sir, what else we are going to cover? 100 question answers. Sir, 100 question answers in batch? Yes, of course, 100 question answers in batch. I have crafted super 100 question PDF out of my question bank. And that super 100 question PDF I will be sharing on Monday on my Telegram channel. Sir, from where the super 100 has been drafted? See, these super 100 questions are not some other questions that I have created myself. Or these super 100 questions are not the pirated ones. These super 100 questions are based on comprehensiveness of the syllabus. These super 100 questions depict the entire syllabus. And if you are able to solve these 100 questions only now, and try to understand, you will be able to solve most of the question. These super 100 represent 80 to 90% of your syllabus. If you are able to do these 100 questions, it is sufficient for you for your Jan 26 attempt. This include not just the questions which are comprehensive, not just the questions which have tricky adjustments, it also contains questions which are relevant for your amendment portion, And it also contains questions from RTP and September 25 exam paper also. So even if you feel like you are lacking somewhere, you are not lacking. It will be completely up to date superintendent question. If you are able to do this, that's all. Sir, this time I am planning to write some questions along with you. And how we'll be doing it, I'll be telling you in the later part. So are we clear with the coverage? We are going to do 100% concepts, no compromise on that. How question answers we are going to do? We are going to do 100 questions in class. I have a PDF of superintendent question. It is under making. It will be shared to you via Monday. And we will be writing certain questions of the superintendent. I will be telling you which we will be writing, but that keeping that thing for a secret right now. Okay. Huh. Sir, we have material of other faculty. Sir, we don't have your concept book. We don't have your concept book. Can we sit in this power batch? Always welcome. If you have material of any faculty which is amended with Finance Act 2024, welcome. Absolutely welcome. Whatever things extra are in your book, you can share with me. It is less likely to happen. But whatever things extra I have in my book, I will be sharing with you. I will be making you write those things, and you have to incorporate such things in your book so that your book is. So faculty, any material faculty is welcomed in this batch. No issue whatsoever. It is not a compulsion that you should be coming with my material only. You can come up with any faculty's material. QB, full-fledged question bank not required. If you have question bank of any faculty, see superintendent questions are from general category. See, these are from past year questions. These are some questions made by me. These are questions from RTPs. So it is very likely to happen that you might see these questions from your book also. So for QB also, you don't need to refer our book. It is not mandatory. If you want to refer, I have freely circulated the question bank on my Telegram channel. But it is not mandatory. If you have question bank, any faculty, it is going to work on this point. Are we clear on this point? Yes, sir. Absolutely clear. Sir, if we ask MCQ, how we are going to tackle MCQ? How we are going to tackle MCQ? I have multiple resources through which I can help. First of all, that has been understood from the past that MCQs are the byproducts of concepts. Yesterday only I posted a video on which on just on the basis of raw concepts, we were able to solve all the 15 MCQs that have come in September 25 attempt. And MCQs wasn't the issue with the students. Along with that, I have certain list, I have certain important pointers based on which you will be able to solve MCQs. So MCQ is not the issue. So over the period, we will understand how we are going to help with the MCQs, but need not to worry. MCQs will be on your tips throughout the batch. You will be able to solve MCQs with concepts that we'll be studying in the batch. So that will not be an issue. Sir, bas, that's it. That's it. Just with these material now. Just with these things, with this concept book, with the classes, with the question answer practice, with the writing practice, I personally target that we will be able to score 65 plus. 65 plus. Whether your score was 40, 42, whether your score was 35, or you are attempting for the first time, your target should be minimum 6. This is the bare minimum target I am expecting. And why? Let me tell you. In group 2, you have a paper called Integrated Business Solution, which nobody is aware of what ICI is going to ask. Nobody is aware. Nobody is aware. So if I assume 40 marks in that subject, that means entire 110 is dependent upon two subjects, that is DT and IDT. That means you require minimum 55 in both the subjects. Then only you will be able to pass. So for that matter, our preparation has to be next level so that this 55 becomes just a icing on the cake. Or I should say a cup of tea. This should be your cup of tea. 55 should be very easy for you. So therefore, with that aim, we are starting this batch. That too, it will be complete. Are we clear? So is it the only thing that you are giving? No, sir. There are certain extra things that I am giving this batch. Certain extra things. Sir, So test series also? Yes, test series also. And this is not just simple test series. Try understanding this. This is not just simple test series. See, I have divided the entire syllabus of CA Final DT into 5 blocks. Each block represent 2 or 3 chapters. And I have prepared 5 block tests plus one full length test. You have to appear these 5 block tests as we complete the chapters, and this full length test will be appeared simultaneously along together. How this full length test is going to be conducted, let me tell you. As soon as our batch ends, we will come together on a Google Meet session. I will be sitting in front of you as an invigilator. I will be providing you the question paper, and you have to write that question paper in the manner that you write your exam. This is not just simple exam paper. This is not just simple mock test. This has been crafted by me. You have to write this paper as if you were writing this paper in exam. So it is very important to appear this full length test, and this will definitely prepare you for exam. Good morning, Dashrath. Good morning, Vaishnavi. So these test series now, your preparations will be next level. I can guarantee that if you continue with these preparations now, your 65 target is achievable. Sir, what about what about doubt support? How are you going to give doubt support? See, for doubt support now, I have Telegram channel. Along with that, I have Telegram group. Along with that, I will share my personal mobile number. Not right now, but towards the end of the session, I will be sharing my personal mobile number with you, on which you can directly message your doubt to me. Directly implies directly messaging on Telegram, not WhatsApp, because this is the personal mobile that I have. My mother also calls on the same phone, my brother, my sister, my father also calls on the same phone. So you are not going to call directly, you are going to message me out. In case you want to have a telephonic conversation, just message me, sir. I want to talk to you. I will call you from my end personally. So I am also available on call, no issue whatsoever. Your no doubt is going to be unresolved. Every doubt I am going to solve on the same day. That I can commit till exam. I am going to solve your doubt on the same day. You need not to worry about doubts at all. Sir, uh, after this batch, are you going to give any marathon support, any question answer support? Even though after batch you will not require marathon, but still I am committing marathons also for this batch also, and that too entire English marathons I will be taking. Even after completing the batch, if you require that you want to just brush up your concepts, I will be taking marathons also, so that marathon support will also be available to everybody. Are we clear? This is what I am going to offer, but not just at a cost of price of the batch. I want certain extra things. All these things I am going to offer. I want a cost. I want 4 promises from all of you. Are you going to give? Are you going to deliver? So first of all, tell what 4 promises. Are just tell me, are you going to offer? Are you going to deliver 4 promises to me? Are Baba, batao na. Are you going to give 4 promises to me? I want 4 promises. See, I am going to give you entire concepts. I am going to give you question answer PDF also. I am going to give MCQ preparations also. I am going to give you test series also. I am giving you personalized doubt support also. I am giving you marathons also. Don't you think that I should accept these 4 promises? Expect 4 promises. Yes, sir. Yes, sir. Yes, sir. First of all, sir, what are those promises? Active listening. First promise, sir, is active listening. What is, sir, active listening? See, of course, this batch is going to be faster. You all are aware of this. So you have to be active listening. Huh? It should not be the case that sitting like this and sleeping in the class. This is not allowed. If possible, try sitting on a chair made of plastic or wood or on stool. It is better to sit on these material rather than sitting on bed and watching the lectures. Please come off the bed and sit on chair, sit on table, sit on stool. It is not advisable to sit on bed. First thing, it is basic. Huh? This is a part of the habit that we have inculcated to be more comfortable. It is difficult to come out of bed in winter, but it is necessary. So active listening has to be there because there might be certain points which I would be speaking faster. So for that matter, you have to be continuously listening now. You cannot afford to lose out points. The active listening has to be there. Second thing, daily practice questions, or I should say DPQ. What are these DPQs? See what happens at CA final level, what issue I have identified. I have understood that at CA final level, most students face problem in writing the answer. Correct. Many people say that sir, we are aware of concepts, sir, we are aware of question answers, but we are not able to write those questions in exam. Everybody says the same thing. I'll be active list. Perfect. Most students say that sir, we are not able to write question in exam. We are aware of the concept, but we are not able to write question in exam. So sir, how are you going to write? You are going to write only with the practice now. What is the duration of class? Duration of class is going to be 3.5 hours to 4 hours, and we'll have 19 to 20 lectures. That means 75 hours. Daily practice question imply daily I will be giving you almost one question to practice. One question daily implies 20 classes, 20 questions. You just have to write 20 questions with me. That is going to take half an hour of yours. That is important for understanding. That is important for the subject. How you are going to write? Let me tell you. I have a practice sessions. I'll show you how to write the answers. I'll show you over the period. But remember, daily I'm going to give you one question and you have to write that question. And not just write that question, you have to send that question to me on my Telegram channel or Telegram number that I'll be sharing. To write that question as if you were writing that question in exam. And I will point out the errors you made. I will point out the errors you made and I will correct you the suggested measures so that your presentation increases. And let me tell you, in last batch, na, we had nearly 45 live students. Out of these 45 live students, na, only 6 were able to send all the 20 DPQs. Only 6 sent DPQs. Even if you are watching this lecture as recorded now, do share DPQs on my Telegram number. I always check. Even if I am ahead of the batch, I'll still check the DPQ. So no matter whenever you are watching this lecture, do share the DPQs that I asked you to share. Last time what happened was 40 out of 45 live students, only 6 students continuously sent their DPQs, all the 20 DPQs. And believe me, all 6 of them passed. And 5 of them secured exemption. This is what the power of presentation is. This batch is not just this is not just a batch in which I teach concepts. It's not just that batch. We understand, we practice question answers, we do practice, we hold each other's hand till the result. It is not just a batch on which I just teach and go. It is not that way. And it is important, and as you said, you are going to promise I want this to be delivered. 20 questions only can you practice. See, it is not for my benefit now. I know how to write answer. I have already passed my exam. You have to pass, so for that matter, you have to write. That is what one promise I want. Third thing, sir, one notebook. This is optional. See, what happens is when I am scribbling down in my on my iPad. Okay, when I'm scribbling down. So if you are able to scribble, just make a small notebook like this. We have from starting. From starting, just write the concepts. If you want to write, then only write, so that you are always aware. From starting, just write the concept and just put that notebook upside down and start solving questions in this notebook. So for that matter, throughout the batch, now you will be aware. Awareness is important, and this notebook will help you to be aware. That is the only purpose of this notebook. If you are able to do this, it is beneficial for you. You are okay to prepare. See, no need to buy. You must be having some of the other notebooks. So it would be great if you maintain the notebook. And last thing is trust factor. I always crack while saying my voice cracks when I ask this trust factor. What does trust factor imply? See, you live in a world of YouTube, I should say. You live in the world of digital era where Geo has digitized everything. You have access to everything. Any content which you think I have not thought well, you might see others. Because it is possible. That is why you have come here. Sir, what I want, Whatever you have after this batch is final. If you want to change anything during the batch, change it, no issue. Whatever book, whatever classes, whatever question bank you are going to use has to be frozen. That should not be changed. If you feel like that I have not taught a topic well, just report it to me. I will again teach that topic. I will clear your every doubt personally. That should not be the case. But after understanding a topic, you switch faculty or you switch note. You just come to me. I know things. I know how to teach things. I know I have experience with many students. So you need to have a trust factor. Whatever material, not just in DT, you have decided right now has to be fixed. Whatever classes that you are going to choose has to be fixed. That should not be repetitively, because what happens is now, what when I was a student, I used to face this. I had only one material of DT. Now while I had completed that material at least 2 or 3 times, while writing the exam I was able to picturize every page of that book, and that is only possible when we have only single material. If i had if i had multiple materials of the same subject, I might have not been able to recall in exam. So it is really important just to stick to one material, stick to one faculty. See, whoever faculty you are choosing now, remember, knows everything. If you want to ask anything about detail, anything that is relevant in your syllabus, I know that thing. Just as that, you just come and ask to me. That trust factor is important. And believe me, if you trust me now, it is my duty to take you. Whatever possible measures I can do, I will. Whatever possible. That is these are the four promises I want. First of all, active listening. Second thing, practice. Third thing, it is optional notebook. And fourth thing is, with these four promises now, we can for sure target 65 plus marks, and it is doable. One of the student Dashrath who messaged earlier scored 67 in DT. He was our power batch student. Tested on us. If I am allowed, I can show the chats that he used to ask. He used to ask questions regularly. He scored 67 in DT. Sir, I want to take the class, but internet is not good. Want to do what to do? Whether is class YouTube take or through app? See, first of all, first 5 lectures, 4 5 lectures will be on YouTube. Remaining lectures will be on Fast app. And how you are going to access of the Fast app? As you purchase the classes now, you will be given access to Fast app where you can watch the classes. So in case now you are not able to watch it live, you can watch them recorded also. These four promises I want. With this you will be able to. With this you will be able to. Perfect, sir. We will follow all the points. We'll follow. Good morning, sir. Good morning, Shiva. Let me take you through the exam pattern. How exam pattern has been. See, there is a pattern that has been followed by ICA in exam. Let me tell you a brief. Let me tell you briefly what pattern ICA follows. First of all, CA final DT contains nearly 114 marks, or I should say 118 marks. How this marks has been distributed? Part 1 is MCQ based. What I have identified is ICI normally asks MCQ in 4 patterns. 4 things. First is integrated case study, 4 questions of 2 marks each. We have another integrated case studies, 4 questions of 2 marks each. We have third integrated case studies, 4 questions of 2 marks each. Second case study, we have 5 questions, I guess. And remaining, we have MCQs, individual MCQs, 2 marks each. All in all, this MCQ is 30 marks. If I am asked to generalize the pattern as to which question is being asked, this third case study I have seen is either from transfer pricing or it is from NR taxation. Normally, what I have seen is third case study is from either of the international taxation. Rest case studies can be from any topic, that is not sure. Sometimes it is penalties, sometimes it is miscellaneous topics, sometimes it is assessment, sometimes it is capital gain. Any topic can be asked in this MCQ. Even CRD topic that you might think of leaving can be asked in this topic. Normally, these individual MCQs I have seen is from the amendment portion. This is the generalized pattern of what has been asked in exam. Except, of course, there can be certain exceptions to this, but this is the generalized pattern as to what is being asked. In descriptive part 2, we have 6 questions, out of which question 1 is mandatory, and from question number 2 to question number 6, we have to attempt any 4. What is being asked, I'll tell you. First question is mandatory of PGBP from companies. In this question only, you can be tested about 115 BAA or BAB, and you can also be tested MAT in this question. So this is what is being asked in first question only. Good morning, Kalva. Good morning, Viraj. Prithviraj. Okay. First question is mandatory. You are aware of these things. I'm just briefing out. Shubham, like MCQs case studies asked from assessment chapter also is this, it is irritating chapter. Need not to worry. Need not to worry. Need not to worry. I can assure that assessment will be your favorite chapter. After the sessions, assessment will be your favorite chapter. Kalva, purchase your classes, did not receive the link. Need not to worry. I said now you will be receiving link till Monday or Tuesday. You will be having first to 4 to 5 lectures on YouTube only. For that matter, subscribe to this channel. Come to our Telegram channel where I will be sharing YouTube link of every lecture. At least 5 lectures I'll be taking on YouTube. So you will be receiving link of the YouTube videos on Telegram channel only. Come there. You will be receiving key to serial key within 1 or 2 days. Need not to worry. Out of this question number 2 to 5, let me brief you out how questions have been asked in past. Question number 2A can be from can be from any of the chapter. Normally 2A is either capital gain, MAT, assessment of various entities. This has been the pattern, and 2B is normally the non-resident taxation. 2B is normally non-resident taxation. This can be reversed. Sometimes it is being reversed, but question number 2 is these few topics only. In question number 3A, normally what is being asked is trust taxation, and 3B is double taxation avoidance agreement. This is the generalized pattern I am talking. Question number 4A is normally from TDS. Question number 4B, what I have understood, is from transfer pricing. Question number 5A is from assessment or appeals. Question number 5A normally has 3 parts, out of which 2 are to be attempted. So these are from assessments or appeals. Basic generalized pattern I am saying. Question number 5B is from base erosion profit shifting, model tax conventions, tax treaties, international taxation. 5B is this topic only. And we have 6A, B, C, D. 6A is normally tax audit. 6B is GAR. 6C is advance ruling. And 6D is, what topic it was? Miscellaneous provision, yes. This is the generalized pattern as to what is being asked in exam. Sir, is this followed in September 25? Yes, it is followed. Is this followed in May 25? Yes, it is followed. Is this followed in November 24? Yes, it is followed. Was this pattern followed in May 24 also? Yes, this pattern has been consistent through. This pattern has been consistent throughout. That means if you try just to try to analyze, see, if you are thinking to skip out any topic like non-resident taxation, then assessment of various entities, again, you can skip together. If you are thinking to skip out non-resident taxation, which you will not think of skipping after this batch, then you can skip even capital gain also. This is how collectively things go. If you skip out Garna, then all the 3 topics will be worthless. Are we clear? Are we clear with the exam pattern? Out of these 5 questions, we have to attempt any 4. Each question is of 14 marks. Not necessary to mention. Each question is of 14 mark. Are we clear with the basic understanding of the exam paper? Which questions are being asked from which chapters, and how you have to approach, I will be telling in the later part of the batch. Are we clear with the exam paper? Anybody having any doubt? Anybody having any doubt till this point? I'm just watching the messages. If you have any doubt, just message me so that we can start off with our basics. See, first of all, I will be giving some times to the basics so that it at least creates a base for our coming preparations. Seems like things are clear. See, if you follow my book now, I'm just giving you a small feature of that book. For example, we have God's style. Okay? In every chapter, see, this is the preface. I mean, preface has been written by me, of course. But in every chapter, first page, I have left some space at the bottom of the chapter, and I have left space for you to write your name. For example, we have God's child. God's child is not the name of the person, but okay, God's child. When you write your name and use CA as prefix now, it injects a different kind of motivation in you. When I used to study now, I used to write my name as CA Rahul Satija before passing, and on every chapter, on most of the chapters, I used to write. On most of the pages, I used to write so that I feel motivated. What happened was a day before exam, when I was feeling demotivated while reading the penalties chapter, I was not able to recall every penalty, so I was feeling very demotivated. On very first page, I saw my name, and CA was written prefix to that, and that created a different kind of motivation within me. I mean, it reminded me of what I am working for. So I have left a space the bottom of every chapter so that you can write your name whenever you feel worry. And after looking at this name only, now you will be able to recall for what you are working for. So it is just a small thing. It may not matter for most of the students, but it really mattered for me. Really helped me a lot. So if you think now, if you have an option to write in your book, just write CA before your name so that you're always motivated. Basic thing. What are taxes? Sir, it has never been asked and it is not going to be asked. What are taxes? Sir, it is nothing but a unilateral finance charge that you pay to government. For example, your parents pay you pocket money. They want nothing in return. Similarly, you pay taxes to the government. They want I mean, you don't have to expect anything in return. Whatever benefit that government is giving you cannot expect that benefit. You just have to pay money and keep your mouth shut. That is the basic definition. Unilateral financial charge in the form of unilateral financial charge in the form of compulsory payment. Okay, sir, no issue. We don't need to cover this definition at CA final level. Important is constitutional right to tax. Constitutional right to tax is given to central government as per union list under entry 82. Entry 82 is important under Constitution of India. Under union list, this power to levy taxes is governed under entry 82. That means central government has right to tax the income of any individual or any person. Similarly, under entry 46 of the state list contain tax on agriculture income. So taxes on income can be levied by central government under 82, and taxes on agriculture can be levied by state government under entry 46. These two entry numbers are only important, and even though that has never been asked, but still this is the area which can be tested in MCQ. Entry 82 under union list for tax on income, entry 46 under state list for tax on agriculture income. You can skip out this point. You can skip out this point. Simple point is entry 82 of union list prescribes tax on income, gives power to central government. Entry 46 as per state list gives power to state to tax on agriculture income. Basic thing it is. Sources of income tax law. See, just telling you for instance, if we consider income tax laws versus income tax act, there is major difference. These are not two same things. Income tax act and income tax laws are not the same thing. Sir, when income tax act 1961 was enacted in parliament, it was just act. In 1961, Ministry of Finance came up with income tax rules. Income tax rules 1962 These are also to be read along with income tax. So do we have rules in our syllabus? Yes, we do have rules in our syllabus. Whatever depreciation rates that you hear now are based on rules. Rules prescribed these depreciation rates. So income tax rules are to be studied. Along with that, we have many CBDT circulars. We have notifications that are to be studied along with that. We have many judgments from High Court or Supreme Court that are to be studied along with that. So remember, ITIT judgments are not part of your CA final syllabus. So if you remember any ITIT judgment from your office experience, you just have to ignore them. Whatever output that you have understood from the ITIT judgment, you have to ignore them for the time being. Only High Court and Supreme Court judgments are part of your syllabus. Apart from that, sir, Finance Act is to be studied. Every year, Nirmala Sitharaman ji come in the parliament on 1st Feb and announce, hereby I am going to reduce the corporate income tax and multiple things she announces. So Finance Act is applicable, and for your attempt, Finance Act 2024 is applicable. Not to 2025, it is 2024. Finance Act 2024 is applicable. And remember, Finance Act 2024 was the act which was enacted in between of the year. I mean, that was the election year. The previous year, 24-25 was the election year. So for that matter, Finance Act for your syllabus are two. First one was Finance Act, first one, 2024. It was passed on 1st Feb 2024. Finance Act 2 for 2024 was passed on 23rd July 2020. As soon as Modi government came into power for the third time, Nirmala Sitharaman ji, after becoming finance minister again, announced the budget on 23rd July 2024. This is an important date for your examination. And most of the amendments have been done after this date. Therefore, this date has to be remembered because many changes you are going to see from this date, effectively from this date. I will be referring this date again and again. Just you need to remember that Second Finance Act for 2024 was passed by Nirmala Sitharaman ji on 23rd July 2020. One thing to be understood, sir, whenever CBDT lays down any circular, it is binding on assessing officer. I mean, assessing officer has to mandatorily follow that circular, whatever circular that CBDT lays. And notifications are being issued just for extension purpose, like if a date is to be extended, if any support is to be given, these notifications are being issued by this CBDT. If you collectively combine all the five things, Income Tax Act, Income Tax Rules, circulars, notifications, judgments, and Finance Act, this collectively form income tax law. This collectively forms income tax law. What did I just say? Law is not equals to act. Plus rules, plus circulars, plus notifications, plus Finance Act, plus judgments collectively form law. Are we clear? Yes, sir. So our syllabus contains income tax law and not just the act. Basic thing it is. We are very much aware, and this is not the thing that is going to be tested in exam. So that is not the area where we should focus much. Sir, we have basic definition of a person under income tax. Different category of person have been created so that different tax rate for each kind of person can be prescribed. What is the category? We have individual like you and me, natural humans, natural person. We have Hindu undivided family in HUF. See, whatever the depth of HUF is, we'll cover over the period, but right now we need to understand that HUF is a kind of person. We have partnership firm, multiple people grouping together, forming a partnership firm. We can have LLPs, this is also a kind of person. Company, whether Indian company or foreign company, is also person. Any association of person or body of individual, an association of person or body of individual, this is also a person. See, what is the difference between AOP and BOI? Need not to remember, just telling, need not to remember this thing. Whatever is necessary to remember, I will tell you. This is not necessary to remember, just listen to this. AOP is formed for a common, sorry, AOP is formed for a specific purpose. See, for example, if I want to distribute clothes to people, my intention is to distribute clothes to people. Multiple people coming together just to distribute clothes to poor people, so it is called AOP. It is formed for a specific purpose. AOP is always formed for a specific purpose, whereas BOI is not formed for a specific purpose. For example, multiple people come together and start a club. It is not for a specific purpose, just people meet, talk, and go. So, for that matter, BOI is not for specific purpose, but AOP is for a specific purpose. AOP can have a company, a firm as a member, but BOI is only body of individual. No other SSC can be a part of BOI. So these are two basic differences. Need not to learn. I am specifically saying need not to learn. If you just heard, that is okay. Need not to learn this point. Any local authority, like we have Gram Panchayat, like we have municipal corporation, these are also a part of a kind of person. And we have artificial juridical person. For example, we have courts, we have temples, we have political parties. These are also the person. So any individual HUF, AOP, BOI, company, cooperative firm, a local authority, and artificial juridical person, these are the different kinds of person under Income Tax Act. Important person, important point. SSC. Whenever such person are liable to pay taxes, then they are called SSC. Whenever such person, individual, HUF, AOP, BOI, artificial juridical person, company, are liable to pay taxes under Income Tax Act, they are called SSC. Plus one more thing SSC includes, that is SSC in default. What is SSC in default? I will remember. I will tell in latter part of the batch. Right now, you just remember that SSC includes any person, any of the above person liable to pay taxes under Income Tax Act. Plus, it also includes SSC in default. Only thing you need to understand. Now we have a term called previous year. Previous year is the year in which income is earned. Whatever income you earn is whatever the year in which you earn the income is called the previous year. For your attempt, that is for Jan-26 attempt, previous year 24-25 is only applicable. That means whatever the income that has been earned on 1st April 2024, from starting from 1st April 2024 to 31st March 2025 is only applicable. Whatever income that you earned from 1st April 2024 till 31st March 2025 is only applicable. This is the previous year that is applicable for your attempt. Similarly, we have a term called assessment year. Assessment year implies the year in which taxes are paid. As soon as this 31st March 2025 is ended, we start assessment year is started. That means from 1st April 2025 till 31st March 2026. We have a year called assessment year in which income is assessed, in which we pay taxes. So we have 2 years, year of income and year of taxes. As soon as we have previous year ending, then assessment year starts. Basic, very basic thing it is. See, some people might find it very basic, but remember, everything takes time. Everything has to be understood in depth. No? So these basics are important. Sir, sir. We understood. That means after every previous year, assessment year comes. As soon as we earn the income, next year government is going to charge taxes on that income. We are absolutely clear with that. But can't there be certain cases that income can be taxed in previous year only? Can there be certain cases in which income is taxed in previous year only? Right answer is yes. Normally, income is earned in previous year, tax in assessment year, but there are certain cases that government taxes you in previous year only. There are 5 such instances, and what are those 5 instances? Let me tell. For example, we have with us Shubham. Okay. Shubham fell in love with Obama's daughter. Oh, not yes. Shubham fell in love with Obama's daughter. And such that lady Michelle, if I'm not mistaken her name, that Obama's daughter fell in love with Shubham so much that she wants Shubham to be in United States. She never wants to let go Shubham. She arranged a visa for him. She arranged a citizenship for him. Everything is being arranged by that lady for Shubham, and she wants Shubham to stay in United States. For that matter, Shubham is permanently leaving India. Do you think that government is going to wait for next year to come? If somebody who is living in India, who is leaving India without intention of coming back, do you think that whatever income that Shubham earned in this year, government is going to wait for next year? Answer is no now. For that matter, if a person leaves India without any intention of coming back, it is assumed that it will be taxed in previous year only. Assessing officer is not going to wait for assessment year. First case, first case. Yes, sir, we are clear. So if somebody, for example, we have Kishore, we have Kishore. Kishore goes to USA for MBA or Kishore goes to London for MBA. Is he going to come back? Is he not going to come back? So that is not questionable. He is going to come back. That is being presumed by the government. See, if person leaves India for the purpose of marriage, it is presumed by the government that that person is not going to come back. But if a person leaves India for the purpose of education, it is not presumed that he is not going to come back. He might come back. Income is not charged in previous year only if he leaves India for education purpose. This has not been asked at final level. This has been multiple times asked in inter level. So we must be aware. We must be aware of this thing. Second thing, for example, we have an occasional ship. What is an occasional ship? That once in a lifetime comes to India. See, for example, there is a ship in Sudan, Vagera, and comes to India and goes to some other country. Once in a lifetime, it has come in India. Do you think that for that ship that has only come once, government is going to wait for next year to take taxes? Government is going is Do you think that government is going to wait for next year and then tax such income? Right answer is no. If a ship that occasionally comes to India, sorry, that comes India very rarely. Government is not going to wait for next year. So for that matter, any shipping company which rarely comes to India is going to be charged to taxes in previous year only. Government is not going to wait for assessment. You specifically remember in our taxation, we had a section called 172. This talks about such shipping companies. We will study that topic in our taxation also. But giving a brief to you about that, giving a brief about that, that we have a shipping company which might be taxed in previous year only. Government is not going to wait for assessment year to commence. Okay. Then third example. Okay, third example. For example, we have Prithviraj, we have God's Child, we have Kalva, we have Shubham, we have multiple people. Okay. Neha, we have multiple people sitting together. Some is from Chennai, some is from Guntur, some is from Hyderabad, some are from Bangalore, some are from Kochi. There are students from multiple places. We all came together. We all came together with a common intention that we are going to distribute clothes in this winter. We are going to distribute clothes in this festival. Every one of us collected certain kind of chanda. If you understand chanda, we understand chanda. We collected money from people in our neighboring just to distribute the clothes to the poor people. We distributed the money. We came together, collected money, and we intend to use this money for distributing clothes to poor people. Now, what happened? We six people, we six people, donation, absolutely. We six people collected 5 crore worth of donation just to distribute to the poor people. We six people collected 5 crore rupees of a donation to distribute food or clothes to the poor people. We distributed also. But we are left with 1.5 crore rupees. We are left with 1.5 crore rupees, which we are thinking to spread between five only. Now just imagine. We five or six people came together just to do a small thing, just to do a small thing. And we collected certain money also. Do you think that government is going to wait for next year to tax us? Because we five people are different people. Today we are together. Tomorrow, somebody else might be at another other place. I might be at some other place. Government is never going to locate all five of us together. So government has given a provision that if we have a AOP which is formed for a specific purpose, and that purpose is fulfilled, then government is not going to wait for next year to come. If you have any income now, government is going to charge the taxes in the year you have earned the income. Government is not going to wait for next year. Government is not going to wait for next year. What did I just say? AOP, BOI, artificial juridical person formed for a specific purpose, and that purpose is fulfilled. Government is not going to wait for next year. It is logical. Are you understanding logic behind these points? See, there is a reasonable basis as to why government wants to tax in previous year only. It is very logical now. We are five or six people collectively sitting together right now. Tomorrow, any people may go any place. So how government is going to locate? So for that matter, government is going to tax you in previous year only. Is not going to wait for assessment year. Fourth point, if we have any discontinued business, for example, if a business was going well, I was preparing chips, at eating wafers, that chips I was preparing, I was making, I was doing well. All of a sudden, I shut down the industry. I shut down my factory. Now, this is a suspicious task. Any of the business which is discontinued and all of a sudden is a suspicious task. So, government in this case might tax you in previous year only. You might have done something wrong because of which you are shutting down the business. So for some businesses which are discontinued, government can tax such person in previous year only. Government might not wait for assessment year. And last person, for example, we have Kevina. Let me tell you what Kevina did. Kevina had multiple plots. She had plots in Gurgaon. She had plots in Chennai. She had plots in Guwahati. She had plots in Mumbai. But government is not aware of her plots. She had lands at multiple places. All of a sudden, one day, she received a phone call that department is aware of her lands. Department is aware. What she started doing, she started selling off her properties. Every property, and that too in cash, and transferring the cash to other countries. Oh my god. What Kevina is doing, she is having lands which is not known to department. All of a sudden, she gets to know that department is aware of her properties. She started to sell off the properties and started transferring the cash to outside countries through Hawala network. Do you think that government is going to wait for next year to tax whatever whatever assets she is transferring? Do you think that government is going to wait for next year to tax such capital gain or such transfers? Government is not going to wait. Provision says if person try to escape taxes by transferring the assets and transferring the money, government is going to intervene and tax you in pre. Are we understanding? Are we understanding that these are five logical pointers as to when government is going to tax you in previous year only? Government is not going to wait for assessment year in these five cases. What are those five cases? Sir, first of all, person leaving India without an intention of coming back. For example, marriage. Second thing, if a non-resident shipping company comes to India, that rarely comes to India. Third thing, AOP formed for a specific purpose and purpose is fulfilled. Fourth, any discontinued operations. And fifth point is, sir, person trying to escape taxes by transferring the assets. Even a no PAN number would come in the sale deed. I am saying that you are selling in cash. And not always PAN comes. There is a limit as to what PAN comes. And what if even if you have PAN registered, if even if PAN come on the sale deed, what would happen if you go outside India? If you are selling right now, if you have sold property right now, government taxing you in next year would not make any sense now because you would be out of India. Government has PAN number of Vijay Mallya also. Government has PAN number of multiple protesters also. So do you think that government has been able to catch them? It is quoting PAN number is for normal person who try to escape taxes, have multiple sources, they can leave India as very easily. So that is not the case that with PAN number you will be able to be identified. Government wants this privilege. That is why this privilege is given. So five pointers. Are you able to read? Are you able to recall with me? Are Baba, five pointers. Five pointers. Non-resident shipping company. Person leaving India without an intention of coming back. Any discontinued operations. AOP formed for a specific purpose. And fifth pointer is, sir, any person trying to escape the taxes via transferring the assets. These are the five instances as to where income will be taxed in previous year only and not in the assessment year. Are we clear? Are Baba, are we clear? Yes, sir, we are absolutely clear. Sir, sir. As you told, previous year starts on 1st April 2024 to 31st March 2025. For your attempt, this is the previous year. My question, Harish says, yes, sir, okay. My question to all of you, can this previous year be shorter? Can this previous year be shorter? Right answer is yes. This previous year can be shorter. See, for example, we have Harish with us. Harish has been sitting at home from years. He has been sitting at home for years. No income, no taxes. Okay, basic fund of Nimotai, basic fund of the government is don't earn any income, so that no, don't pay any taxes. You will be only required to pay taxes when you earn the income. So best part is don't earn any income. So that is what Harish was doing. But all of a sudden, on 1st December 2024, he started off a business and started earning in lakhs. Earning in lakhs. Till 1st December 2024, he was not doing anything. On first, he started a business, and within 4 or 5 months, he was able to reach such heights that nobody ever thought. For Harishna, year of earning the income won't be the entire 12 months, it would be just the date on which he commences the business. That means previous year can be a shorter one. This this is a classic example in which previous year can be a shorter previous year. So in case you are starting business for the first time, you are starting to earn for the first time, date on which you start earning shall be the date on which your previous year commences. This is the point that I will be referring multiple times when I will be teaching trusted taxation, that I will be teaching assessment. Only thing you need to remember is there is a concept of shorter previous year. Not always year starting from 1st April till 31st March is previous year. Previous year can be a shorter previous year as well. The date on which you start your business is the date on which previous year commences. Clear? Clear to everybody? Are Baba, I want this activeness. Huh? Everybody has to be very clear, clear, clear. Everybody has to respond. Clear, sir, clear, sir, clear, sir. These were the basics. I thought telling these basics were important. Understanding previous year assessment year, shorter previous year assessment year in which income is taxed in previous year, cases where income is taxed in previous year. All these cases I told. These were the basic pointers. Moving forward to next part, that is tax rates. Clear, sir. I am telling you Mool Mantra. Mool Mantra is the basic essence of the tax rates. Every SSC, every SSC, has two kinds of income. Let me draw this in board notes. Okay, we have every SSC has two kinds of income. First one is income taxed at special rates. The other part is income taxed at general rates. Income tax at special rate, we have lottery, 30% tax rate. We have short-term capital gain under section 111A being taxed at the rate of 15% oblique 20%. Say before 23rd July tax rate was 15%. After 23rd July tax rate was increased to 20% on short-term capital gain of listed securities. See, we will study this topic in depth, just giving you a brief idea as to what tax rates were in special incomes. We had long-term capital gain 112 wala, which was being taxed at the rate of 20% earlier. Now this has been reduced to 12.5%. We had long-term capital gain under section 112A, which was being taxed at the rate of 12, which was being taxed at the rate of 10%, but has been increased to 12.5%. We had royalty income, which was taxed at the rate of 10%. We had cryptocurrencies income, which was being taxed at the rate of 30%. We had online gaming taxed at the rate of 30%. These were the special incomes. Whoever earns such income has to pay taxes as per the whoever, you, me, any company, any AOP, any cooperative, any partnership firm, any local authority earning these income would be paying taxes at these rates only. These special tax rates are fixed for every SSC. Only thing that is going to change is the general tax rates. Whatever their general income is, dividend income, house property income, business income, any salary income, whatever the income that is apart from these special tax rates are being taxed at general tax rate, and this general tax rate is going to change. This is going to be different for individual. This is going to be different for company. This is going to be different for cooperative. This is different for partnership firm. This is going to be different for, these are the four instances only. These are the four people on which different tax rate apply, that too for general income. When you will be able to identify tax on general income plus tax on special income, whatever tax have been arrived at, add surcharge to it. And whatever tax plus surcharge you arrive, you have to add health and education cess at the rate of 4%. Now, our point of discussion is what is the general tax rate for every kind of person, and what is the surcharge rate for every person. That is the next part of the. Are we clear what we are studying? Are we clear what we are studying? See, these are very basics. You must be very active while answering because this will lay down the speed of our batch. If you think that we are going a bit faster, you may ask to slow me down. If you think that we are going okay, just right, sir, absolutely proper speed. If you think that we might go a bit faster, just write faster so that our batch speed runs in that way. See, this is the batch in which I will be continuing based on your inputs. All clear, sir, all clear, all clear. General tax rates for assessment year 25-26. Sir, what are the general tax rates? Any individual, HUF, AOP, BOI, artificial juridical person, whether he is resident or non-resident, not relevant. Sir, he will be taxed with this following rate. I will tell you, see, whatever 115 BACs, I will come to every part, but right now, let me use my process of teaching. See, any individual HUF, AOP, BOI, artificial juridical person, if their total income is up to 2.5 lakh rupees, no tax will be charged. If their income is between 2 lakh 50,000 rupees to 5 lakh, then 5% would be the tax rate. If their income is within 5 lakh to 10 lakh, then 20% would be tax rate, and income exceeding 10 lakh would be taxed at the rate of 30%. This is the basic idea, basic tax rate, everybody is aware. If we have any senior citizen who is 60 years of age but less than 80 years of age, and he is a resident person now, then in that case, basic exemption limit would be 3 lakh rupees. To 3 lakh, no tax is charged. 3 lakh to 5 lakh, 5% tax rate. 5 lakh to 10 lakh, 20% tax rate. And greater than 10 lakh, 30% tax rate. These are the basic tax rates. Everybody is aware. I need not to specifically point. Everybody is aware. And senior citizen who is of 80 years of age or more, who is of 80 years of age or more, up to 5 lakh, no income is being taxed. From 5 lakh to 10 lakh, 20% would be tax rate, and exceeding 10 lakh, it would be. It is not a special case to be understood. Only thing we need to understand up to 2.5. So try repeating after me. Now try repeating along with me. For individual HF, AOP, BOI, artificial juridical person, up to 2.5 lakh, no tax. 2.5 lakh to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. Exceeding 10 lakh, it is 30%. Again. Repeat after me. I know you are aware, but try repeating after me. Just try repeating after me. Up to 2.5 lakh, no tax. 2.5 lakh to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. Exceeding 10 lakh, 30%. Sir, clear. If we have senior citizen plus resident person, in that case, up to 3 lakh, no tax. 3 lakh to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. 10 lakh exceeding 30%. Okay, sir. If we have super senior citizen, to 5 lakh, no tax. 5 lakh to 10 lakh, 20%. Exceeding 10 lakh, 30%. Sir, very clear. Absolutely clear. Absolutely clear. We have a CBDT circular. The CBDT circular is important. For example, we have with us, who shall we take? Bijlit. Bijit. We have Bijit. You know, Bijit was born on 1st May 1965. Bijit was born on 1st May 1961. I mean, he is sitting just here, but he is very old. He is very aged person. Bijit was born on 1st May 1965. Okay. That means he would be celebrating his 60th birthday, 60 years of age, 60 years of age, birthday on 1st May 2025. Yes, he was born on 1st May 1965. He would be completing 60 years of age on 1st May 2025. Yes. That means for previous year 24-25, he was not 60. He wasn't, he did not attain the age of 60. Only it was in May 2025 he achieved the age of 60. Therefore, in our case, he would be taxed with this slab up to 2.5 lakh, no tax. 2.5 lakh to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. Exceeding 10 lakh, 30%. He would be taxed with this slab. Yes or no? Yes or no? Yes or no? Arey Baba, just answer yes or no. Yes, sir. He would be taxed with this slab because for previous 24-25, he was not 60. This slab rate is given for the person who are 60 and resident. What if Digits was born on 1st April 1965, celebrating age of 60 on 1st April 2025? What would be your answer? Which which slab rate he is going to? Up to 2.5 lakh basic exemption or up to 3 lakh of basic exemption? Which he is going to which benefit he is going to get? To 2.5 lakh no tax or up to 3 lakh no tax? On 1st April 2025, he is turning 60. He is turning 60. He is completing 60. On 1st April 1965, he was born. On 1st April 2025, he was completing the age of 60. Can I say for previous year, 24-25, he was 60? Yes or no? He was 60, yes or no? Digit says he will get a benefit of 3 lakh. And he's correct. Digit says that he will get a benefit of 3 lakh. Why? There is a reason. See, let me tell you a simple example. On every year, 1st January, you celebrate New Year. You celebrate New Year, yes, everybody celebrates New Year, yes, everybody. But does that mean that last year was ended on 1st April? No, sir. Last year was ended on 31st December only. Year is ended on 31st only. On 1st Jan, we celebrate the new year because it starts the new year. Similarly, on 1st April 2025, new year of his age is being started. 61st age of 61 started, which completely implies that 60 was completed a day before and he completed the age of 60 on 31st March 2025 only. And that is why he will get the benefit of this 3 lakh basic exemption. What did I just say? If a person celebrating birthday on any day is presumed to have completed that age a day before. Why? Because it is normal. Na? If I am celebrating New Year, so last year was completed yesterday only. Na? Last year was completed yesterday only. Today I am starting the New Year, so last year was completed yesterday only. So if somebody is celebrating birthday on 1st April, he must have completed his age a day before. That means he was 60 on 31st March only, and he would be given benefit of 3 lakh. Are we clear on this point? Are we clear? Also, a simple pointer. This 3 lakh basic exemption limit and 5 lakh basic exemption limit is only available to resident person. It is not available to non-resident. Very basic definition it is. Need not to think about it at all. Perfect, sir. Absolutely perfect. Now, whenever you tax any individual HUF, AOP, BOI, artificial juridical person based on above tax rates, whatever tax that you arrive at, you have to add a surcharge to it. Okay? Tax surcharge is to be added. Now, how much surcharge is to be added? That is the point of question. How much surcharge is to be added? Remember, if total income, for example, in our case, Bijit only. In our case, Bijit's total income is up to 50 lakh rupees, then no surcharge on taxes has to be added. If Bijit's income is up to 50 lakh rupees, no surcharge. Whatever tax arrived plus education says done. If total income is more than 50 lakh rupees but up to 1 crore rupees, then 10% surcharge is to be added on the taxes. If income is more than 1 crore but up to 2 crore, then in that case, now 15% surcharge is to be added. Perfect, sir. Absolutely clear. But sir, what if income exceeds 2 crore? Then what to do? Income is up to 2 crore, then what to do? Sorry, exceeds 2 crore, then what to do? You have to do a bifurcation. This table is important. If you don't have this bifurcation in your book, just take a screenshot and write it down in your book. If income exceeds 2 crore, then you have to do the bifurcation. Whatever the income is dividend income, LTCG income, other LTCG income, and short-term capital gain under section 111A. All these four incomes would attract a surcharge at the rate of 15%. Whatever dividend income, LTCG income, STCG, 111A income we have would attract a 15% charge only. And after separating this income, whatever the general income turns out to be, other income turns out to be, if such other income is up to 2 crore now, and in that case, 15% charges would be applicable. If other income is up to 2 crore, is exceeding 2 crore, up to 5 crore, then 25%. If the other income is exceeds 5 crore, then 37% surcharge would be applicable. So what did I just say? If income is up to 2 crore, no bifurcation, Add surcharge as per the above slab. But if income exceeds 2 crore, then bifurcation is to be made. Whatever dividend income is, LTCC income is, and SCC 111A income is, has to be separated. Such income would be taxed and surcharge would be added at the rate of 15%. The other income that remains has to be checked. If such other income is up to 2 crore, then surcharge would be 15%. If other income exceeds 2 crore but up to 5 crore, surcharge 25%. And if other income exceeds 5 crore, then 37% surcharge would be applicable. Sir, can't we do an example? Arey Baba, why not? Why not? I want participation of everybody. I want participation of everybody, everybody, everybody. For example, in our case, we have a person called Kevana. Kevana. See, please correct me if I'm mispronouncing your name. I'm not very familiar with the your names. If I'm mispronouncing in any sense, na, do correct me. Okay? Kevana is having 40 lakh rupees of income. In this 40 lakh, 15 lakh is the capital gain income and 25% is the other income. What is the amount of surcharge that will be added to her income? What will taxes? What will be the amount of surcharge? I want the answer. What will be the surcharge on dividend income and other income? What will be the amount of surcharge? This first question I will only tell. First question I will only tell. Sir, if income is up to 50 for up to 50 lakh rupees, no surcharge. No surcharge is added. If income is up to 50 lakh rupees, then no surcharge is added. Okay, sir, we are clear. Now you answer. Income is 95 lakh rupees. Everybody who is sitting has to answer. If income is 95 lakh rupees, Kevana has income of 95 lakh rupees. What amount of surcharge would be added to capital gain income, which is 45 lakh rupees, and other income, which is 50 lakh rupees? Well done, Neha. Well done, 15%. 15 lakh, 50%. 50%. Second question you have to answer. Second question you have to answer. Total income is 95 lakh rupees. Out of that, 45 lakh is capital gain income, 50 lakh is other income. How much surcharge is to be added? How much surcharge is to be added? Everybody has to answer. Kevina says 45%, 45 lakh, 15%. God's child says 10%. Vijit says 10%. Harish says 10%. And right answer is sir, 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 sir. Sir, refer this table. If income is exceeding 50 lakh but up to 1 crore, flat 10% surcharge. Flat 10% surcharge. Irrespective of the income, flat 10% surcharge to every income. If I see, oh my god, sir, oh my god, flat 10% surcharge to every income. Irrespective of the income, we have to add surcharge. So right answer is 10% for both the cases. Now answer the third one. Devna has income of 1 lakh, 120 lakh rupees. Devna has income of 120 lakh rupees. Out of this 120 lakh, 55 lakh is capital gain and dividend income, and other income is 65 lakh. What would be the surcharge rate to this? What would be the surcharge rate in this case? What would be surcharge case? See, I will not proceed further unless you answer. Rahul says 15%. Harish says 15%. Neha says 15%. Arey Baba, yaar, you are winning my hearts. You are winning my hearts, but yes, journey is pending. Neha says 15%. Perfect, perfect. 15%, 15%, 15%. Everybody at wholesale rate saying 15%, 15%, 15%. Ramya says 15%. Everybody says 15%. And let me check what answer is. Oh my god, 15%. God's child says 15%. Everybody says the right answer. 15% will be the surcharge rate for both the incomes. Now, this is the question of the minute, question of the hour. Bijit says 15%. Absolutely correct. Everybody says 15%. It is correct. It is correct. It is correct. Now, third question. Kevana has income of 2.55 crore rupees. Kevana has income of 2.55 crore rupees. Out of this, 2.3 crore is the dividend income and capital gain income, and 25 lakh is the other income. Before you answer, I would ask you to refer this chart again. I'm again referring this chart to you. If income is up to 50 lakh rupees, no surcharge. If income exceeds 50 lakh but up to 1 crore, then 10% surcharge is added. If income exceeds 1 crore rupees but up to 2 crore, then 15% surcharge has to be added. If income exceeds 2 crore, then you have to do the bifurcation. You have to do the bifurcation. Whatever the capital gain and dividend income is, add 15% surcharge to it. On whatever cap gain income and dividend income we have to add 15% surcharge. And on other income, we have to check whether other income is up to 2 crore or not. Then in that case, 15%. If other income exceeds 2 crore, up to 5 crore, then 25%. If other income exceeds 5 crore, then 37%. Then in that case, what would happen? Sir, whatever the dividend income is, cap gain income is, 15% surcharge would be the case. This is for sure. And since other income is up to 2 crore rupees, it would be 50%. And as it is rightly said by Neha, it is said by Rahul, it is said by Shubham, it is said by God's child, Harish, Ramya, everybody says the right answer. You have got, you have got the point. Even I'm missing out, you are missing out something. Perfect. Perfect, 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 perfect. Now answer this question. Kevna has an income of 3.6 crore rupees. Perfect, perfect, Kalva. Kevana has income of 3.6 crore rupees. Kevana has income of 3.6 crore rupees. Of this 3.6 crore, 1 crore is cap gain and dividend income. 2.6 crore is the income, other income, that is house property, business income, whatever it is. 2.5 out of 3.6 crore, 1 crore is the cap gain and dividend income, and 2.6 crore is the other income. I want everybody to answer. I want everybody to answer. Huh? Everybody. Everybody. See. 1525. Rahul says 1525. I am writing out the names. Rahul says 1525. Shubham says 1525. Shubham also says the same. Harish says the same. Neha says the same. Vijit says the same. Oh my god, how can you all be same? Devana says the same. Let me check the answers. How can you all be same? Hey Papa, when you are correct, enough, so answer would be same. You all are. Ramya is also correct. Ramya is also saying the same answer. It's correct. How did I get this answer? See, whenever income exceeds 2 crore, whatever the cap gain income is, that would be surcharged at 15% only. And other income, if it is up to 2 crore, then 15%. If it exceeds 2 crore, up to 5 crore, then 25%. If it exceeds 5 crore, then 37%. We are aware of this. Now answer the sixth one. We have income of 7 crore. Out of this, 4 crore is cap gain, 3 crore is other income. I am not able to identify which answer you are referring to. Anjana. 1525, I am saying 1525. Anjana says, Takshal. If I'm not Takshila, if I'm not mispronouncing your name, correct me, okay? Correct me when I'm mispronouncing your name. Anjana says the same answer. Now we have Takshila says the same answer. Alva Sri Durga says. Shubham says. Neha says. Again, Harish is saying the same. Kevana is saying same answer. Everybody is saying 15 out of 20, 15 and 25. And right answer is. Oh my dear God. Oh my dear God. Everybody says the correct answer. Why? Sir, we are aware. Whenever income exceeds 2 crore, we have to do the bifurcation. Whatever the cap gain and dividend income is would be surcharged at the rate of 15% only. So always 15% is the maximum surcharge limit for cap gain and dividend income. And whatever the other income is, we have to check if it is less than 2 crore, exceeds 2 crore, up to 5 crore, or exceeds 5 crore. We have to check. In this case, other income is exceeding 2 crore up to 5 crore, then 25%. So 15 is to 25 is the answer. Now we have the next point. Question number 7. Total income of Kevana is 10 crore. Out of this, 4 crore is the dividend income and 6 crore is the other income. What would be the surcharge applicable? What would be the surcharge applicable? Arey Baba, what would be the surcharge applicable? Harish says 10 and 37%. 10 oblique 37%. Sorry, 15 oblique 37. Harish says. After Harish, we have Neha saying the same answer. Neha, We have Kevana saying the same answers. We have Vijit saying the same answer. We have Anjana saying the same answer. We have Kalva Sri Durga saying the same answer. We have Ramya saying the same answer. And of course, this is the right answer. This is the right answer. 10% and 37% is the surcharge rate. 8% and 37% is the surcharge. Clear? And sir, everybody has said the right answer because they understand the provisions. The last point. 20 crores the total income, 10 crores the dividend income, 10 crores the other income. See, this would be max. This surcharge on this income would be maximum 15%. And since this exceeds 10 crore, 5 crore, then 37% in the old regime. That is what the point says. Yes, no extra points for guessing in this case. I hope you understood how do we add surcharge. Absolutely, Harish. Absolutely, Neha. You all got the right answer. Right? I'm expecting you are able to process the information right now. You all are able to process the information right now, how surcharge is added, how and when, how much surcharge is added. You are able to process that information. Can I accept that? Can I accept that you are able to process? Can I accept that you are able to process? Yes, sir. Whatever answers I saw, right, till coming towards the last portion, everybody was able to understand. Everybody was able to correctly answer the question. Can I, can I assume that you are able to process? Can I assume? Are say na yes, sir. Are say na yes, sir. If you say yes, now you have to bear my question. Now you have to bear my question. Let me tell. I'm writing down a question and you have to calculate tax. I made mistakes on surcharge all the time. Thank you so much, sir. Most welcome, Anjan. Most welcome. Yes, sir. I was missing on this one. Correct now. Again, for the other income, need to see the limits. Don't worry. Don't worry. Now I have one question. See, everybody says you are clear. Everybody says clear. Now you have to answer my question. You have to answer my question. Now we have with us, for example, Anjana. Anjana, age 32. Assuming age 32. Okay. 32. नहीं, sir. It is too much. Anjana is 22. Okay. Anjana 22 years of age. Has business income 3 crores. Dividend income 20 lakhs. LTCG. Hmm. Winnings. Lottery 1 crore. Wow. This is a beautiful question. Beautiful question. LTCG 112 1 crore. STCG 111A 50 lakh. LTCG 112. Let's ignore this LTCG. This is where our calculation goes wrong. Okay, चलो ठीक है कर लेते हैं ना. Let's do it. LTCG 112A 50 lakh. Calculate tax liability. You have to calculate tax liability. Let's do it together. Or you want to do ahead of me and then let me follow. Okay, चलो ठीक है. Let's wait. It is 8:54. I am waiting for you all to start for 2 minutes. I'm waiting for 2 minutes. I'll be waiting for 2 minutes. I want you all to start first, and then I will join you, and I will utter the answers. I will tell how I solve this answer, and you can continue with me. I'm giving you an early advantage to start. Whatever you understood, you have to solve. Achha. It is important. All the transfer took place after 23rd July, 23rd July 2024. You don't have to tell me the tax. You don't have to tell me the percentage. You just have to tell me the. You just have to solve the question. You have to calculate the tax, you have to calculate the surcharge, and you have to calculate the education cess. I'm giving you 2 minutes time. Okay? You just start early. You don't have to answer. You just have to start early. I will solve it along with you, and I will tell you the depth of the topic. Everybody has ignored the depth of this topic. How depth this carries, this topic carries. You will understand this. You can start earlier. So meanwhile, na, if you are watching live, why don't you like the video? You can like the video na meanwhile. Of course, the YouTube is going to boom this video to others also if you like the video. Liking, basic thing I'm asking. Just like the video. That is what I'm asking. Can't you do that? Sir, of course we can do. Of course we can do. Okay. Starting off with the solution. First of all, calculating the taxes. In blue pen, I'm calculating taxes. See, simple business income and lottery income would be taxed. See, I am assuming old regime. Okay, for as of now, I am assuming old regime because I have not taught the new regime right now. So assume old. Na. For the time being, assume old. This 3.2 crore would be taxed. See, 3.2 crore, how this would be taxed? Minus 10 lakh, multiply 30% plus 1 lakh 12,500. This we can do basics. This is the basics that we do. It is also allowed in exam also. In exam, this is allowed. Whatever the income exceeds 10 lakh rupees can be taxed at 30%, and we can simply add 1 lakh 12,500. This is allowed in exam also. ICI does the same thing. So tax on this income would be 94 lakh 12,500. Tax on lottery would be 30%, which implies 30 lakh. Tax on LTCG, if it is transferred after budget, it is 12.5%. That means 12 lakh 50,000. If capital gain under section 1118 takes place, it is being taxed at 20%. That means it is taxed at 10 lakh rupees. And if LTCG 1128 takes place, so over 1.25 lakh, 50 lakh minus 1.25 lakh multiplied by 12.5%. This is the amount of tax. I'm not totaling it for the time being. I'm not totaling it because it is not even relevant. Anybody having any doubt up to this point? Anybody having any doubt up to this point that, sir, how you calculated taxes we did not get? See, business income and dividend income would be taxed at the rate of slab. Lottery would be taxed at 30%. LTCG would be taxed at the specific rate, whatever are prescribed. Are we clear? Are we clear on this point? Yes, sir, we are. We are clear. Now do the practice that we have done. Now we have to calculate the surcharge rates applicable. For that matter, we need to have total income. Total income would be total income. I have not done calculated total income only. Wow. All in all, our total income is 6.2 crore rupees. All in all, we have total income of 6.2 crore rupees. Let me cross check it. Say 3.2, 1.5. Perfect. 3.2 crores is the total income. Out of this total income, LTCG 112, 112, 111A, and dividend income. How much it turns out to be? I'm just highlighting. LTCG, STCG, LTCG, and dividend income. If I do the total of them, it turns out to be all these four income collectively make up 2 crore 20 lakh rupees. 2.2 crore. other income is 4 crore. Yes, 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 yes. Can I say that surcharge on these incomes would be 15% and surcharge on this would be 25%? Can I simply say this? Can I simply say this? Yes, sir. On this capital gain and dividend income surcharge would be 15% and other income surcharge would be 25% as you rightly practiced. Right now we practice this only now. Whatever total income we have, we bifurcate the income based on dividend and capital gain income. Such would be surcharged to 15% and other income would be surcharged based on the slab. Yes, 15%, 25% would apply. Perfect. Now question comes. We can simply add 15% surcharge to this. We can multiply 15% to this. We can multiply 15% to this also. Okay, okay. We can multiply 15% to this also. To lottery, we can simply add 25%. Yes, we can simply add 25% surcharge. But now question arises. I have an issue. I have a tax of 94,12,500. This tax is on business income and dividend income as well. Now the issue major is whatever tax that would come on business income, surcharge would be 25% and whatever the tax would be on dividend income, surcharge would be 15%. That means out of this tax, we have to split the tax. Out of this tax, we have to split. Out of this tax, we have to split. Anjana and Neha, I'll answer that. Wait for 2 minutes. Out of this tax, we have to split the tax because there is certain tax which is on business income and surcharge on that would be 25%. And there is certain tax which is on dividend income, surcharge on that would be 15%. So for that matter, we have to do a small split of taxes. And how that split of taxes? Split of taxes would be based on total income. Of this 94,12,500, can I simply say that 3 crore out of 3.2 crore would be tax on dividend income? Sorry, business income. Can I simply say 94,12,500 divided by 3.2 into 3? Can I simply say tax on business income would be 8824,220 and tax on dividend would be 94,125,000 into zero point 0.2 divided by 3.2, which would be 588,281. And on these taxes, surcharge would be applicable 15% to this, and in above business income, surcharge would be 25% applicable. Are you able to understand what I'm trying to convey? Whenever you have capital gain income, you are already aware of the surcharge. And whatever tax you arrive at, you can directly add surcharge to that income. You can directly add surcharge because whatever taxes come on capital gain income, you can directly add surcharge 15% to that. Whatever lottery income you have, whatever lottery income you have, you are aware of the taxes. You can directly add the surcharge to such taxes. But sir, issue is with the dividend income. Dividend income is taxed at the rate of slab, but surcharge applicable is 15%. So how do we arrive the tax on dividend? We have to split in the proportion of the dividend. Whatever the total taxes arrive on business income plus dividend income, that has to be split between the two in the ratio of the income. Whatever the income, dividend income we have, that portion has to be separated from the total taxes, and on that 15% would be added. On that 15% would. Did you understand how did we arrive at the surcharge? How did we arrive at the percentage of the surcharge? Now question arises. Anjana and Neha said, "Sir, our income exceeded 5 crore. Then why not 37%? Our income exceeded 5 crore. Then why not 37%? Right now only you did now. Just come on to this point. Just come on to this point now. Neha, if you remember Neha and we had Anjana. Okay, this was the case. This was the case. Our total income exceeded 5 crore only. In this case also, our total income was exceeding 5 crore only now. Does that mean 37% would be applicable just based on total income? Right answer is no. Whenever total income, whatever total income is, we have to ignore total income. If total income exceeds 2 crore, we have to close our eyes and ignore. We have to check the dividend income and capital gain income. Whatever the dividend income and capital gain income is, 15% surcharge would be added to such income. And whatever the other income is, we have to check that income as per slab. If other income is up to 2 crore, then 15%, 2 crore to 5 crore, 25%, and exceeding 5 crore, then 37%. Whenever income exceeds 2 crore, close your eyes and do the bifurcation, do the discrimination, do the stereotype, do the prejudice to the income. Whatever the dividend income is, just separate it. The capital income, just separate it. And whatever the income remains, you have to check for 15%, 25%. Be clear? Are we clear? Are Baba, tell me, are we clear? Even though I will be sharing board notes with all of you, whatever the board notes that I'm writing, I will be sharing towards the end of the batch, because regularly sharing board notes would not make much sense. Also, regularly sharing board notes would be difficult for you to handle. So I will be sharing entire board notes that we have with you all towards the end of the batch. Meanwhile, if you want to practice this question, you can just take a screenshot of it and just try solving this question of your own once. Just answer me. Have you done this type of question in your regular classes even? See, this is not the kind of question that the people touch. Not even faculties touch this question because this would take too much of their time. But I think since we are doing comprehensively, why not to? Clear to everybody? Just take a screenshot of it. You can practice this question at home. It would be of great help. This would definitely clear your concepts a lot. Are Baba, clear to everybody? Clear to everybody? If it is clear to you, just write down clear so that I understand, so that I can proceed further. See, your silence is a danger to me. You know, your silence is a danger to me. Sir, is this free of cost? No. First 5 lectures would be on YouTube, but it is not free of cost. You can enroll for this batch with the link given in description. Okay, clear. Clear to everybody. Anybody having any doubt? If you have doubt, now just ask. I'm saying now, asking doubt, if you think is an issue for you, you have to resolve it. You have to ask doubts if it is not clear to. I will repeat it multiple times if you want. But if you will not ask doubt, I have to proceed further. Clear to everybody? Yes, sir. Absolutely clear. Absolutely clear, sir. Absolutely. Yes, sir. Clear. Yeah, clear, clear. Now, sir, what is the tax rate for a firm, an LLP, a local authority? What is the tax rate for firm, a LLP, a local authority? Provision says a firm, LLP, and local authority is being taxed at the rate of 30% flat. They earn a rupee, they would be taxed 30%. If they earn 100 rupees, they would be taxed 30%. If they earn 1,000 rupees, they would be taxed 30%. If they earn 10,000, 10 lakh, 10 crore, 100 crore, 1,000 crore, 10,000 crore, 10 lakh crore, whatever they earn, would be taxed at the rate of 30%. What the surcharge rate would be if any partnership firm, LLP, or local authority has total income up to 1 crore, no surcharge would be applicable. If their total income exceeds more than 1 crore, then 12% surcharge would be added. So 30% plus 12% if total income exceeds 1 crore. Clear this point? So this is very simple point. These are very simple points. These are not difficult at all. The only difficult portion for today was the last portion only. How do we calculate the surcharge rate? That was the only difficult portion. Otherwise, everything is very simple. Everything is very simple. Sir, we got that. Firm, local authority, LLP, we are very much aware. Now we have a company. We have a company. Now, how do we calculate tax rate for a company? For a company, we need to have differentiation between a domestic company and a foreign company. If we have a foreign company, whatever foreign company earns, that would be taxed at the rate of 35%. This I'm talking about general incomes. The special incomes would be taxed at special rates only, but general incomes would be taxed at 35%. Whatever foreign company earns would be taxed at the rate of 35%. Sir, if we have a domestic company, how do we tax that? Sir, for a domestic company, we have to check the turnover of previous year 22-23. If turnover for previous year 2023 is up to 400 crore, then 25% would be tax rate for such domestic company. If domestic company has turnover exceeding 400 crore, then in that case 30% would be applicable. Simple point. Very simple point. Sir, what if company was not even existent in that year? For what if company was incorporated on 1st April 2024? What would be tax rate? Arey Baba, if it was not in existence, so turnover would be zero now. So in that case, 25% would be applicable, not 30. Company was not incorporated in that year, then 25% would be applicable. We would assume that turnover was zero in that year. Sir, we got that point. We got that point. Sir, why did we take 20 to 23? Do you also have a same doubt? Do you also have a same doubt, sir, that why did we take 20 to 23? Why not 23, 24? Why not 21, 22? Why not any other year? Why did we take this year only? Don't you have this doubt? Don't you have the same doubt? Don't you have the same doubt? Sir, let me tell you the reason. For your attempt, previous year 24-25 is applicable. For your attempt only, first finance act that came on was 1st Feb 2024. Every year it changes. Yes, it changes. Why only previous year 2023? Why not 23-24? Why not? That was my question. Now issue is Finance Act comes on 1st April, 1st Feb 2024. Now just imagine, had Nirmala Sitharaman ji announced previous year 23-24, if she would have announced the previous year 23-24, then previous year 23-24 was still not over. People had 2 months to manipulate their turnover and get the benefit of lower tax rate. The date on which Finance Act was announced, the date on which budget was announced, on that day, people had 2 months in that previous year just to manipulate their turnover and reduce their turnover below 400 just to take the benefit of 25%. So for that matter, always a year which is completed is fixed for the purpose of determining the turnover. The date of announcement of budget claims a year for which turnover is fixed. For previous year 2023, turnover is fixed now. The date on which budget is announced is the fixed. We have fixed turnover for that. So that year is selected. That is why previous year 2024 is not selected. Any previous year prior to that is selected. I would be giving a reason. I would be giving this explanation in multiple other provisions also in latter part of this batch. Well, I will be telling many other instances in which such case has been taken by the act. So are we clear? Why 22-23? Why not 23-24? Sir, very clear. Very clear. Very clear. Sir, what would be the surcharge rate for the company? See, very simple it is. If we have a domestic company, if we have a domestic company, their total income is up to 1 crore, then no surcharge. Domestic company, foreign company, if total income up to 1 crore, no surcharge. If total income exceeds 1 crore, then 7% surcharge. Exceeds 10 crore, then 12% surcharge. Similarly, for foreign company, if total income up to 1 crore, no surcharge. If exceeds 2 crore, sorry, if exceeds 1 crore up to 10 crore, then 2%. And if it exceeds 10 crore, then 5% surcharge is the rate. Apart from that, 4% education cess is always added. Cooperative society. What would be the tax rate for a cooperative? This is important. I want you all to draw a skull here. I want you all to draw a skull. Why, sir? Because you are most likely to forget this tax rate. You are most likely to forget this tax. Why, sir? How can you say that we are going to forget? Arey Baba, I have experience now. I have this minute experience that people are more likely to forget this tax. Sir, If cooperative has total income up to 10,000 rupees, then 10% would be tax rate. If total income exceeds 10,000 up to 20,000, then 20% would be tax rate. If it exceeds 20,000, then 30% would be tax rate. This is a slab rate. Okay. Basic point. Surcharge for a cooperative would be same for a domestic company. Up to 1 crore, no surcharge. Exceeds 1 crore up to 10 crore, then 7%. And if exceeds 10 crore, then 12% surcharge it is. The basic point it is we don't have much complication in these tax rates. Is it clear to everybody? Are these tax rates clear to everybody? Are these tax rates clear to everybody? Are these tax rates clear to every? Yes, sir. Now I want you all to take out a rough page. Even if you have a notebook, I don't know. Even if you don't have a notebook, try come up with a take a rough page with you all. Take a rough page with you all, and I want you all to write these tax rates with me. I want you all to write these tax rates, every tax rate with me. You are aware, just write it yourself. If you are not aware, just try to copy what I am doing, but write it with your own hand so that you do not forget any tax rate. Okay? Just write it. Just write it. Try writing it, sir. It will be for your benefit only. Okay? Now, tax rates general. If we have any individual, HUF, AOP, BOI, artificial juridical person, up to 2.5 lakh, no. 2.5 lakh to 5 lakh, we have 5%. 5 lakh to 10 lakh, we have 20%. Greater than 10 lakh, we have 30%. If such individual is senior citizen, that is greater than equal to 60, plus resident, then up to 3 lakh, no tax. 3 lakh to 5 lakh, 5%. 5 lakh to 10 lakh, 20%. Greater than 10 lakh. If such individual is super senior citizen, that means greater than 80 age, plus resident, then up to 5 lakh, no tax. 5 lakh to 10 lakh, 20%, or greater than 10 lakh, 30%. Not just this, all these people are leviable to surcharges also. How surcharges are calculated? Total income to 50 lakh, no surcharge. Greater than 50 lakh to 1 crore, 10% surcharge. Greater than 1 crore up to 2 crore, 15% surcharge. Greater than 2 crore, then you have to do the bifurcation, split. CG, 111A, 112A, 112 plus dividend, 15%. Other income up to 2 crore, 15%. 2 to 5 crore, 25%. Exceeding 5 crore, 37%. Apart from all these taxes, sir, 4% education cess would be simply added. The firm, LLP, local authority would be taxed at 30%. Total income up to 1 crore, no surcharge. Greater than 1 crore, 12% surcharge would be added. Plus 4% education cess is mandatory. We have a company. For a company, you have to do a demarcation whether it is a domestic company, whether it is a domestic company, or whether it is foreign company. Normally, foreign company is being taxed at 35%. Domestic company is being taxed based on turnover. Turnover for 22-23 up to 400 crore, then 25%, else 30%. Surcharges. Domestic company foreign company. Total income, if up to 1 crore, no surcharge, no surcharge. Greater than 1 crore to 10 crore, 7%. Greater than 10 crore, 12%. For foreign company, it is 2% and 5%. Always add 4% education cess to it. Then we have cooperative. We have up to 10,000, 10%, 10,000 to 20,000, we have 20%. And whatever income exceed 20,000, it would be taxed at 30%. Surcharge for a domestic company would be only applicable, plus 4% education cess will always be applicable. This is what the gist of entire 1 hour that we are we clear on this point. Are we clear on this point? Are we clear? Are Baba, just tell me, are we clear on this point? Are we clear up to this? Were you able to recall all the tax rates, surcharge rates? Yes, sir. Everybody. Firm LLP I just wrote na, Vijay, 30%. Everybody has to answer, otherwise I'll not proceed. Everybody has to answer, otherwise I will not proceed. I will not proceed. I will just stop. But here, you South Indian people have a different accent. I'm not sure whether I'm stereotyping. Sorry for that. But this South Indian accent is very classy. I mean, this is a very, I should say, addicting. I I was speaking last time. Na, I got addicted to this accent. I'm not sure whether it is correct or not, but it is very enjoyable. Yes, sir. Clear to everybody. Now, only small concept we'll do, and then we'll take a break. Very small concept we'll be doing, and then we'll take a break. Okay, sir. For example, we have with us Neha. A small concept, only a small concept. Neha, I'm giving you two instances. Okay? Case one, she has income of 4 crore 99 lakh, 99 lakh only. And in one case, she has income of 5 crore 1 lakh. I want you all to calculate taxes. I want you all to calculate the surcharge, and I want you all to calculate education cess. Assume old regime, age 20. This is what I want you all to calculate. Very basic thing it is. Basic thing. Sir, if you ask us to calculate the taxes, so it is normal income only surcharge, you are aware. Sir, how do we calculate? How do we calculate? See, sir, we are aware that 4 crore 99 lakh minus 10 lakh we can simply do multiply 30% plus 1 lakh 12,000 we can simply add 1 lakh 12,500 we can simply add. This is what we can do to calculate the taxes. Yes, you can always do. This is always correct. This is always accepted by ICI. 147 82 500. Similarly, in this case, 5 crore 1 lakh minus 10 lakh into 30% plus 1 lakh 12,500. Basic point it is. And it is very logical also. Whatever tax we arrive here and whatever tax we arrive in this case, only difference is on account of 2 lakh multiplied by 30%. This is the only difference. 60,000 is the only difference between the taxes. Otherwise, there is no difference. This seems very logical. In this case, now when income is 4 crore 99 lakh rupees, then surcharge applicable would be 25%. What the surcharge would be? What surcharge would be? And in this case, surcharge would be 37%. In this case, surcharge would be 37% because income exceeds 5 crore. Na? See, income exceeds 5 crore, we don't have any special income. So whatever this income is, this would be only other income, and other income exceeds 5 crore, then we have 37% surcharge. Now, how much surcharge would be applicable? 147,825 into 25%. 36,95,625. Just for the sake of simplification, I am adding these two income, not considering the education cess. Right now, I'm just adding these two income. 1 crore 84 lakh 78,120. And here it would be 148 42500 multiplied by 37%. 4 lakh 91,725. Adding this would yield us 2 crore 3 lakh 34,225. Oh my god! What? Not adding education cess for the timing, not adding education cess. You know what? Two people are crying with this. Two people crying. Two people are crying with this. First one is Neha, and the other one is Logic. Two people are crying with this case. First is Neha, the other one is Logic. So why are you saying this? Just try understanding this. When Neha had income of 4 crore 99 lakh rupees, she was liable for taxes of 1 crore 84 lakh. She was liable for this much taxes, 1 crore 84. That it seems logical also. But when her income was increased by just a 2 lakh rupees, only 2 lakh increment, only 2 lakh increment. But can you see the spike in taxes? 18 lakh taxes got spiked up. Do you think this is justified? Do you think that this point is doing justice to Neha? Do you think it is not doing justice? It is not doing any justice. Neha is crying, sir, what mistake I did? What mistake I did? Only mistake I did is just to earn extra 2 lakh rupees, just to earn extra money. Only mistake she did is to earn extra. And because of extra, only earning extra amount, just earning extra, she is required to pay 18 lakh of extra taxes. Isn't this wrong? Don't you think that it is wrong? Don't you think that it is wrong? Right answer is yes, it is wrong. Yes, absolutely it is. Now, for that matter, government gives you marginal relief. And what is that marginal relief? I'm not getting right now into details. I'm just laying down 5 steps to calculate the marginal relief. Right now, you might think you might think that what sir you are talking, this is very basic in CA inter CA final, it is very basic topic, but this has been tested in RTP Jan 26. This is the topic that has been tested by IC and RTP, and that was the only trickier point in the entire paper, I mean the entire question, this marginal rate. Sir, I am laying down 5 steps to calculate. First of all, calculate tax plus surcharge with, sorry, on income in question. Step 2, calculate tax plus surcharge. Just write it down if you want to write, otherwise logic would be sufficient. When I'll be telling the logic, that would be sufficient. On nearest surcharge bracket. Nearest surcharge bracket imply the bracket income on which surcharge changes. For an individual, surcharge changes at 50 lakh, 1 crore, 2 crore or 5 crore. For a partnership firm, surcharge changes at 1 crore. For a company, 1 crore or 10 crore. Or for a cooperative, it changes at 1 crore and 10 crore. So we have to calculate the taxes. We have to calculate the taxes plus surcharge on the nearest surcharge bracket. So in our case, the place where surcharge changed was 5 crore rupees. For Neha, it was 5 crore rupees. Third step. Third step is crucial. Tax amount in point 2 plus extra amount. Step number 4. Step 1 minus Step 3. Step number 5 is step 3 plus 4%. Everything is logical. You might think that why are you telling why are you telling mechanical process? Why are you asking us learn? I'm not asking you to learn. I'm just telling the reasonable steps to follow. ICA is going to give marks on the step. Remember. And I'm not asking you to learn. I will tell the every logic of the steps. Every logic. What I mean to say is, with this step, I'll make you understand. You understood this basic fact that when Neha earned 4 crore 99 lakh rupees, she was charged to taxes rupees 1 crore 84 lakh. She was charged 1 crore 84 lakh rupees. But as her income increased by 2 lakh rupees, her tax liability got shot up by 18 lakh rupees, nearly 18 lakh rupees liability shot up. What these 5 point ask us to calculate? First of all, calculate tax plus surcharge on the income given in question. In our question, our Neha's income was 5 crore 1 lakh rupees. So can I simply say tax plus surcharge is 2 crore 3 lakh rupees? Sir, we are aware, we have to calculate this tax plus surcharge. This is basic thing. How we will be able to calculate marginal relief unless we calculate the taxes on the income? Second thing, what they ask us to calculate, the nearest surcharge bracket is 5 crore. 5 crore is the income on which surcharge changes. So what would be the tax amount and surcharge amount on 5 crore? Let's calculate. 5 crore, that means 500,000,000 minus 10 lakh, multiply by 30%, plus 1,12,500. And on top of that, sir, we would be adding 25% surcharge, because if income exceeds 2 crore up to 5 crore, then minimum 25% surcharge would be added now. 25% is the surcharge added minimum. 5 crore minus 10 lakh into 30% plus 1,12,500 plus 25%. Just telling you, for instance, 185,15,625 would have been the taxes if her income would have been 5 crore. Just understand the next line what I'll be speaking. If her income would have been 5 crore, she would have paid taxes of 1 crore 85 lakh rupees. Now her income is 5 crore 1 lakh. Now her income is 5 crore 1 lakh, and she is required to pay taxes of 2 crore 3 lakh. Neha would be more happy to pay taxes this much amount and surrender 1 lakh rupees extra that she has. Neha would be more happy to surrender extra 1 lakh. It is easier for her to surrender 1 lakh rupees than to pay taxes on this entire 5.1 crore. It would be happier. It would be easier for her now. Whatever taxes on 5 crore are arrived, she would pay taxes on this much, and whatever extra 1 lakh she has, she would be okay to surrender, because if that would be added to her income, she was required to pay 2 crore 3 lakh. It is always easier for her to surrender now. So what point number 3 says? 1 crore 85, Neha, pay this amount. Pay this amount plus surrender 1 lakh rupees extra. This would be the amount of tax, 186, 15625. This would be amount of tax. You have to add education cess to this in fifth number point. 186,15625. Add 4%. This would give us 196,60 to 50. This is the amount she has to pay after education cess. And how much relief she is getting? Earlier she was required to pay 2 crore 3 lakh rupees. Now she is required to pay 186. Nearly 70 lakh is the amount of marginal relief she is getting. If we specifically calculate how much amount turns out to be 203,34,225 minus 186,15625, amount of marginal relief that she is getting is nothing but 17 lakh 18,600. This is the marginal relief. Don't you think it was very logical? Don't you think that these 5 pointers were very logical? This is not steps created out of out to make you learn. These are steps created just to make you understand the process. Whatever income, again I'm telling the logic. For Neha, it was easier to pay taxes on 5 crore, because surcharge here is 25%. And whatever excess income she has earned, it is okay for her to surrender. It is always okay for her to surrender the income. If she is not surrendering this income, extra amount, if she is not surrendering, then in that case, she would be required to pay this much taxes. So instead of paying this much taxes, it is okay to pay taxes on 5 crore plus surrender the extra amount. This is the amount of relief that government gives you. Are we clear with this? Are we clear with this? Are we clear with this point? Yes or no? Yes, sir. Everybody, please answer yes or no. Yes or no. Sir, one more question we want to practice. We are not done. We want to practice one more question. We are not done, sir. We want to practice more. Okay, done, done, done. Now we have, for example, and we have Harish. Harish Private Limited turnover for previous year 22-23 is 200 crore. Clear, 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 sir, clear. Perfect, perfect, beautiful. Everybody who is not answering, the Matarani will give you a pap. Matarani will curse you. And how she is going to curse you? You have to rush in the office. Your office is the 10th floor. As soon as you are about to reach the lift, now your lift will not working. You have to walk for 10 more, 10 floors. This is what the curse that Matarani is going to give you. If you do not just answer that, is it clear or not? Somebody would take away the air in your vehicle. He would puncture your vehicle. Okay. No. Harish Private Limited turnover is total income is 10 crore 25. No, 10 crore 3 lakh 20,000. Calculate tax and my God. See, I never curse for anything so bad, but only small things I have. Only small things. Calculate marginal relief and final tax liability. Now, final tax liability and marginal relief you have to calculate. Do you want to solve it of your own or you want me to intervene and solve it with you all? Do you want me? Do you want to solve it of your own or you want me to intervene and solve it with you? Sir, you solve it. You solve it. You solve it. Chalo, ठीक है, you solve it. Okay, ठीक है. I will be giving you next question as homework. ठीक है. Next question as or break period, break work. See, I told you 5 steps. We had 5 steps. First step is calculate tax plus surcharge on income given in question. That is 10 crore 3 lakh 20,000. What would be the amount of taxes applicable to this income? Sir, taxes applicable to this income would be 25% since turnover for previous year 2023 is this. The surcharge applicable would be 12% since it is a it is domestic company and exceeding total income exceeding 10 crore, then 12% would be applicable surcharge. So 10 crore 3 lakh 20,000 multiplied by 25% plus 12%. 25% plus 12, 28 crore 8 lakh 96,000. Then second step, tax plus surcharge on nearest surcharge bracket. For a company, nearest surcharge bracket appears to be say 10 crore. On 10 crore, tax rate would be 25% only, but surcharge would be 7%. It would be 2 crore 67 lakh 50,000. Now think of this Harish Private Limited. Think of this company as Harish Private Limited. Just think of from the perspective of the company. If this company would have earned 10 crore only, then company was required to pay 2.67 crore rupees, but it had earned just 3.6 lakhs more, but tax liability shot up by too much. Tax liability shot up by nearly 13 lakh rupees. Tax liability shot up just because the company earned 3.2 lakhs more. Liability shot up by 13 lakh. Is this justified? Right answer is no. It is not justified. It is not justified. So for that matter, what government will ask Harish Private Limited to do? Pay this amount, 2 crore 67 lakh 50,000 rupees. Pay this amount and surrender the extra amount. Whatever the extra amount is, surrender the extra amount. 3.2 lakh rupees. Government will ask Harish Private Limited to surrender, and this would be the payable taxes. 2707101234. This would be the required taxes. Government will ask Harish to add education cess to it. 2707 plus 4% would be 28152812 this would be the applicable tax liability. This will be final tax liability required to be paid. And what will be the marginal relief received? See, earlier government was asking to pay 28089600. 280896, is it 00000 minus 27071234. This would be the difference. 28089600 minus 2707. So now Harish got a marginal relief of 10 lakh 19,006. This is the amount of marginal relief that. Did we understand this point or not? Did we understand this point or not? Now let's practice one more question. And I'm not going to do this. You are going to, and this is going to be a beautiful question. We have a, for example, we have a Rahul Cooperative Society. Total income 1 crore 70,000. Calculate marginal relief and final tax liability. And this is your break work. We are almost done with marginal relief concept also. This is the break work that you have to do. I hope you understood the concept of the marginal relief. I am again briefing you out. What I did just intend with marginal relief. See, what happens is just because of increase in surcharge bracket, just because of change in surcharge bracket, your liability for tax is shorts up. Earlier you were liable for 25%, now 37%, so liability shorts up. This happens, normally happens in real life. So just to relieve you, government asks you to pay whatever the taxes are on the surcharge bracket. That means whatever the taxes are applicable on 5 crore, just to pay that taxes and surrender whatever above income you have. Whatever income above, over and above the surcharge bracket is, you have to surrender that, and that would be your payable taxes. Just add 4% to it. In most often cases, let me tell you, in exam also, it is okay if you do not calculate this marginal relief. It is okay for you not to calculate marginal relief, but this final tax liability has to be correctly arrived. If this is wrong now, you will not be given any marks in the question. You will not be given any marks. Marginal relief calculation may be ignored in exam, but this final tax liability has to be correct. And this has to be calculated after considering the marginal relief. At this point, this is your break time. This is your break work. Right now, we are taking a break. It is 9:42. We will have break till 10 a.m. plus minus 2 minutes. I always give 1 or 2 minute extra just because of our relation. 1 or 2 minutes you are okay late. We will start at 10:02. You can take a break. Ensure not using any mobile phone, any social media, any YouTube during the break. Take full break. You can just have a walk. Just hear two beautiful songs. Take any singer you hear. Just hear that. Just have a breakfast, and then we'll come up. We'll come up. Understand the rebate under Section 87A, and then we'll start with the topic capital gain. Just let me know in the comment section how you are liking the session. If you have any doubt, let me know in the comment section. We'll clarify it further. See you after the break. So, guys, welcome back from break. Welcome back from break. Mm. Are you all back from break? Am I audible to you now? Okay. Perfect, sir. Yes, sir. We are absolutely back from break. Arey, nice, nice, nice. Absolutely. So, just before going to break, what we did, we just started off with the syllabus. We understood basics. We understood basics to income tax. Then we came on to tax rates and we completed the tax rates. Apart from tax rates, what else we completed? We understood the concept of marginal relief. This question I have given you as a homework. You just have to solve this down and you have to give me answers. Okay. Tomorrow we'll discuss the solution of this point. Right now, I have one topic to discuss from the basic topics, that is the rebate under section 87A. See, as of now, I am not getting involved in new tax regime. Under we do have a separate provision 115 BA, BAB, BAC, BAD, BAE. We have multiple provisions, but I am not getting into that regime right now. I am just focusing on the old regime right now. When time will come, I will deep dive into the new tax regime. It is easier for you to process things right now. I am just focusing on the complex provisions. Later on, when time will come, I will focus on the new tax regime 115 BAC. It is simpler one. No. What this point says, what this point says, if you are an individual, not just individual, you are a resident, not just resident, you are having total income to 5 lakh. Provision says then whatever tax liability turns out to be, or 500, whichever is lower, will be a rebate given to you. It is a rebate given to you. Very small, very simple provision. It says that if you are an individual who is also a resident, whose total income is up to 5 lakh rupees, then whatever tax liability turns out to be, or whatever the 12,500, whichever is lower figure is, you will be given a relief. But here is a small, minute sa catch. What it says: while considering the tax liability, do not add education cess. That means this comparison has to be made excluding the education cess. Education cess is not to be added for the purpose of comparison purpose. And second thing, sir, rebate under section 87A is not available on tax under section 112A. Whatever the capital gain is referred under section 112A and whatever the tax liability turns out to be under section 112A, rebate is not available on such tax. Now, sir, what did you just mean? What did you just say? We did not understand. Can't you take an example? Of course, I am going to take example. Just we'll understand with example of Mr. Vaishnav. What's your exact name? Vaishnav Shravan Bhaskar. Okay, let's take a simpler name. Ramya. We have Ramya. Okay, I'm just taking an example of Ramya. She has business income of, say, 2 or 3 lakh. 3 lakh. She has business income. She has LTCG under section 112A of 1.5 lakh. She has LTCG under section 112 of 10,000. She has winnings of 10,000. This is her total income. Her total income turns out to be 4.7 lakh. If I am asked to calculate the tax liability of her, see this LTCG under section 112, assume that their assets are sold after 23rd July 2024. Assets are being sold after 23rd July 2024. So, tax liability for LTCG under section 112A would be 1.5 lakh minus 1.25 lakh. That means 25,000 multiplied by 12.5%. That means 3125 would be tax liability and on LTCG 112A. LTCG under section 112, 10,000 we are having. It would be taxed at the rate of 12.5%, which implies 1250 rupees. Simple. Tax on winnings 10,000 would be 30%. This implies 3,000. At last, we have business income. If business income is 3 lakh to 2.5 lakh, we don't have any tax. 2.5 lakh to 5 lakh, we have 2.5 lakh to 3 lakh, we have 50,000 income. This would be taxed at the rate of 5%, which implies 2,500. Tax liability turns out to be 3125 plus 1250 plus 3,000 plus 2,500. Tax liability turns out to be 9875. How rebate is going to be calculated? Check this point out. Provision says tax payable or 12,500, whichever is lower. Lower you have to consider. Now, notable point to mention is tax payable cannot include tax under section 112 because rebate is not available. So out of this 9875, we have to remove this 3125 minus 3125. You will be only given rebate of 6750 or 12,500, whichever is lower. That means 6750 is the amount of rebate that you will be getting. That means 3125 is the tax that you have to pay. Have to pay. You don't have a choice. You have to pay. Plus 4% education cess, of course. That means 3,250 rupees. This is the amount of tax that you have to pay, including education cess. But I hope you understood how do we have to calculate the rebate under section 87. Whenever whatever income that has been given to you, just calculate taxes on that income. And just remove the taxes on 112A, you will get rebate on every income. So do we get rebate on winnings? Yes, we get. Do we get rebate on online gaming? Yes, we get. Do we get rebate on cryptocurrencies? Yes, do we do get. Do we get rebate on royalty or carbon credit? Yes, we do get. We get rebate under section 87 on all the incomes except. Are we clear on this point? Are Baba, please tell me, are we clear on this point? Sir, absolutely. No issue whatsoever. See, you might be having multiple doubts as to what happens in new tax regime. I will come on that point. I will come on that point. We'll tell you what ICI does, but right now I'm not discussing 115 BAC. When I will be discussing that, I will be discussing the different intricate scenarios under 115 BAC. As of now, I'm keeping that thing aside. I'm just talking about old tax regime. When I will be discussing new tax regime, I will be discussing the rebate there too. Right now, anybody having any doubt? Anybody having any doubt up to this point or in this point? Up to this point or in this point, if anybody is having any doubt, so let me. Sir, whatever you just wrote since morning, your multiple examples. How do we get to know that example? See, if you have taken my book or any book, every faculty mentions such thing. Whatever example we took for calculating of surcharge, that is being mentioned. Sir, how marginal relief is calculated? I have whatever steps I have told you are being mentioned here. I have taken the example, the same example that we took for Neha. Same example has been given here. Same marginal relief that we calculated is being mentioned here. Amount also is same. Amount is also same. Same example that we took in classes here. The rebate 87A, as we discussed, same amount is mentioned here also. Now we have alternate tax rates that I'm not going to discuss right now. There is certain time after which only we'll discuss. A small pointer we have. Very small pointer we have, that is application of income or diversion of income. Very small pointer relevant to basic chapter. See what happens is, for example, right now no, I earn salary. Sarthak sir pays me very peanut salary, but he pays. I said to Sarthak sir, dear Sarthak sir, I am an eligible bachelor. What do I do of this much money? I am very spiritual person. I said, Sarthak sir, whatever salary you are giving to me, instead of giving me entire salary, just pay me 50% of the salary and 50% donate to Tirupati Balaji temple. See how spiritual, how religious I am. What I am saying to Sarthak sir, whatever salary you are giving to me, just donate 50% of my salary to Tirupati Balaji temple. Just give me 50% only. Now let us assume I earn salary of 4 lakh rupees. Out of this 4 lakh, 2 lakh I am receiving, and 2 lakh amount goes to directly Tirupati Balaji temple. My question to all of you is whether this 4 lakh would be taxable in my hands or whether this 2 lakh would be taxable in my hands. Question open to all. Question open to all of you. If I am receiving a salary of 4 lakh rupees and I am asking my employer to pay me half sum and I am asking employer to donate half sum to somebody else on my behalf, any temple, any religious temple, a genuine temple, whether this would be included in my salary or only the amount that I am receiving would be included in my salary. What would be? Neha says, Askar says, everybody says, sir, 4 lakh rupees. And it is very obvious, sir. This concept is called application of income. See, whenever you earn certain income and you voluntarily apply such income for any cause, you might give this money to somebody else, any poor, any person. That may be your call, but as per government, on entire income earned is your income, and that is considered as application of income. Whenever any income is considered as application, it is first taxed in your hands, and later on, this 2 lakh would be again taxable for Tirupati Balaji temple. Whatever we have studied in trust taxation, that would take place. But right now, we need to understand whenever any income is being applied by the person, it is first taxed in my hands, and later on, this income would be secondly again taxable in the hands of the person receiving. Are we clear? It is application of the income, even though it is directly donated on behalf. Absolutely correct. Now, let's take another example. See, in Hindi, we have a word. In Hindi, we have a word called SAR. You are aware. SAR implies conclusion. Conclusion means ultimate solution, ultimate, ultimatum. SAR, the crux. And we at FAST provides the SAR of CA journey, that conclusion of CA journey. And what does that SAR mean? SAR implies Sarthak sir, A imply Adish sir, R imply Riddhi madam, and the other R imply Rahul sir. That means we four provide a one-stop solution for CA final journey. We are the crux, we are the conclusion. Only with four of us, you will be able to clear CA final. That is what we provide. Now we all four are partners. Okay, we all four are partners. I am a partner of 25%. Let us assume. Earlier you were receiving salary, now you are receiving 25%. Arey Baba, just take the example now. Don't get into the depth. I am 25% partner. Okay. In partnership deed only. I have explicitly mentioned, dear Sarthak sir, in case I die, whatever profit, whatever salary that is being given to me would be given to my wife. I have explicitly mentioned this thing in my contract. In my partnership, it is mentioned. Now, what if I die? What if I die? Whatever the remuneration that my wife is receiving, that my wife is receiving, whatever remuneration that my wife is receiving would be taxable in her hands, taxable for wife, or will it be taxable for me only, a person who is no more? What would be the case in? What would be the scenario in this? If I have explicitly mentioned this thing that after my death, whatever money that is accrued to me would be given to my wife, would that money be taxed in my hands or would that money be taxed in the hands of my wife or my legal heir? Again, waiting for your answer. Now Neha said wife. And why did you say that? Neha says, Bhaskar says, everybody says wife. Why? First of all, it was presumed that earlier it was taxable in my hands, now it has to be taxable in other hand. That is presumed. Okay. But what is the logic? See, when voluntarily you are contributing your money to somebody else, then in that case it is application of income. But via action of law, see, it is normally a inheritance law only, that if somebody dies, his income transfer is transferred to somebody else. It is inheritance law. Along with that, we have also done an agreement, we have a contract, that means that my income should be given to somebody else. We have a deed, we have agreement. So for that matter, it becomes diversion of income. It is not the application of income. Whenever income is applied, it is first tax in my hands and then tax in the hands of the other person. But if it is diversion of income, that means via contract, via force of law, via agreement, if it is taking place now, then it is not tax in my hands. Rather, it is tax in the hands of the person receiving it. Are you able to understand? Absolutely correct, Harish. Absolutely correct, Neha. Absolutely correct, Bhaskar and Chevanam. Beautiful answer. Beautiful, beautiful answers. I hope you are able to understand these pointers. I normally take these poor examples, but no issue. Take it. No issue, no issue whatsoever. Clear to everybody? Everybody? Clear to everybody? This was our basics, tax rates, surcharge, Ajalli, rebate. This was our first chapter. I'm starting the next chapter, that is income from capital. Before starting this chapter, I would again request you to take a white page, write down what I'm asking you to write, and stick this in front of a wall. Stick this on a wall. No, it would not be taxable. If SSC is alive, then it would not be. Yes, sir. Now, what I want you all to do is just write down what I'm saying. Okay? If you are having paper, you can write it down. If you want to take a screenshot, you can, of course, take the screenshot. Always open. We have. See, I try to divide the chapters into multiple segments just to make you understand easily. Income from capital gain comprises of multiple segments. First segment is basics and definitions. First basics definition is, what is charging section? We have capital asset, we have transfer, we have period of holding, we have rural agriculture, land. These five definitions we have. Then we have computation portion. Computation, we have basics, special considerations. While computation of capital gain, now we have three special consideration. First of all, provisos to section 48 are always considered. Provisos to section 48. Provisos include indexation also, bonds वगैरह 112A. These all things are being covered under provisos. We have how to compute full value of consideration. For that matter, we have three sections. Section 50C, 50CA. And third part of special consideration is cost of acquisition. Here we have multiple zones. How do we compute cost of acquisition in case of bonus? How do we compute cost of acquisition in case of ESOPs? How do we compute cost of acquisition in case of demerger? How to calculate compute cost of acquisition in case of right issue, intangible assets, or in case of exempt transfer? These are multiple instances on which how do we compute cost of acquisition. After that, we will come on to special cases. We have special cases. Special cases comprise of two parts. First of all is Exception to 45.1. If you are not able to understand anything, no issue. I'm not even teaching anything. I'm just making you write the entire flow of the chapter. And once we are clear with the flow, now we will be able to proceed easily. Where we are, we'll be able to locate, and where we have to go, we'll be able to understand. Correct. Exception to 45.1, we have four. We have destruction of capital asset, destruction of capital asset. We have conversion. We have compulsory acquisition, and we have joint development agreement. Other special cases we have lump sale, we have ULIP taxation, we have 50AA, we have 45.4, we have liquidation, we have advance money forfeiture, we have demat securities. Other than special cases, once we are done with special cases now, we will come on to exemptions. Under exemptions, we have 54 series, 54 to 54 GA, and 1037A. After exemptions, we will understand the tax rates. After tax rates, we have other topic, that is exempt transfer. And then we will have miscellaneous. If I ask you to focus on the process what we will be studying, you will be able to understand this is the absolute correct flow of understanding capital gain. How? First of all, we need to have basics. Then we need to understand how do we compute capital gain. Then we need to understand what, once we understood the computation of capital gain, we should be able to calculate the special cases. Once we are able to calculate capital gain in special cases, we must be able to apply the exemptions. Now, then only we will be able to reduce capital gain. Once we are able to reduce the capital gain exemptions, then we need to apply tax rates. Once we apply tax rates, we must be able to analyze which capital gain transfers are not even taxable, and at last, whatever remains will be our senior portion. This is the entire flow that must be kept in your mind. See, whenever you want to understand capital gain, you must be aware of basics, then computation. Then once you understand computation, then special cases computation, then after that exemption, then tax rate, then miscellaneous provisions. This is the flow of the chapter that must be kept, that must be in your mind. So that you are aware where you are, because chapter is very big now. Chapter is very big. You might be lost in the syllabus and you might not even understand where you are. So instead of losing anywhere in the syllabus, you are aware what you are doing. Right away starting from basics. Okay. Section 45.1 says the charging section. Just try repeating after me. It is of no relevance as of now. It is of no relevance for your exam. It is not relevant. Just try repeating after me. Any gain arising from the transfer of the capital asset shall be taxable under the head capital gain in the year in which transfer took place. What did I just say? Any gain arising from transfer of capital asset shall be taxable under the head capital gain in the year in which transfer took place. Five aspects to this definition. First of all, there has to be profit for taxation. Loss cannot be taxed. Second thing, transfer. What is transfer? We have to study. What is capital asset? We have to study. Head capital gain, whether short term, long term, we have to study. And the year in which transfer took place. Is it always the case? No, it is not always the case. We do have exceptions. So there are five parts to this definition. What did I just say? Any gain arising from transfer of capital asset shall be taxable under that capital gain in the year in which transfer took. Basic definition it is. Clear. Need not to learn at all. Now we have definition of capital assets. To understand the definition of capital assets, we have three things. To understand the definition of capital assets, we have three things. First of all, any asset is a capital asset. Oh my god, any asset is a capital asset. That means this calculator is a capital asset. Sneaker that I'm using is a capital asset. I have a comb just to comb my hairs. This is also a capital asset. Everything that I have is a capital asset. It's the pencil I have, it is a capital asset. Every t-shirt I'm wearing, anything I'm wearing this t-shirt, I'm having this mic, I'm having camera, I have a glass of water. Everything is a capital asset. Was this the correct definition? Right answer is no, na. It is incorrect definition. So for that matter, the correction was required. So there came four exclusions. First of all, any stock in trade is not a capital asset except stock in trade. Of course, na. If you have stock in trade and that would be considered as capital asset, then everything would be capital gain. It would be wrong, na. So stock in trade is excluded. Whatever stock in trade you have has to be excluded from the definition of capital asset. Second thing, movable plus personal assets has to be excluded. What does that mean? See, if I have this t-shirt which can move, okay, I can take this t-shirt to any place, and it is my personal t-shirt. It is not commercial, so it is a kind of it is excluding it is an exclusion from the definition of the capital asset. For example, if I have a comb, okay, it is movable, it is personal, so it is not a capital asset. But sir, if I have a calculator, is it movable? Right answer is yes. Is it personal? Right answer is no. It is for commercial purpose. Therefore, it is a capital asset. It is not under any exclusion. When anything is excluded, that would not be considered as capital asset. But since it is not covering under exclusion, it will be considered as capital asset. If I have a car, if car is for personal purpose, it is movable, it is personal, it shall be excluded from the definition of the capital asset. But if it is not personal, it is for business purpose, then it shall be considered as capital asset because it is not personal asset. That means anything that is movable plus personal is not a capital asset. Is not a capital asset. Not word is important. Okay? Movable plus personal, it is not a capital asset. Car is not personal, therefore it is a capital asset. Apart from that, we have rural agriculture land. We have rural agriculture land in India, of course. Rural agriculture land has been kept out of the ambit of the any taxation. Therefore, it is not a capital asset. And last one, we have gold monetization bonds, 1999, gold deposit certificates. You even if you don't remember, na, it's okay. Gold deposit certificates, 2015. What do I just mean? First of all, every asset is a capital asset. Then remove only four things. What four things? Sir, stock in trade, movable and personal assets are to be removed. Rural agriculture land is to be removed, and any gold monetization bonds and gold deposit certificates are to be removed. Rest every asset is a capital. Rest every asset is a capital asset. But sir, here came an issue. Here came an issue. What issue? Sir, for example, if I have a ring, I don't have a ring as of now, but assume I have a ring in my hand, and that ring is completely made of gold. Now, just imagine if this is a gold ring. Don't you think that it is movable? Yes, it is movable. Is it personal? Yes, ring is always personal, now. So if a ring, if we have a gold ring, it is movable personal, it shall be excluded from the definition of capital asset. Therefore, there are certain things, despite of being movable, despite of being personal, they shall be considered as capital asset. Sir, what are those exceptions? We have any kind of jewelry, any kind of drawing, any kind of painting, any kind of sculpture, any kind of archaeological correction, any other form of art, bullion. These things, despite of being movable, despite of being personal, are capital. So what did I just say? What did I just say? Try repeat, try understanding this. First of all, every asset is considered as capital asset. Every asset that you see around is a capital asset, first of all. Then check for exclusion. Is it a stock in trade? Exclude. Is it movable and personal? Exclude. Is it rural agricultural land? Exclude. Rest everything would be a capital asset. Even if there are certain movable personal assets like jewelry, drawing, painting, sculptures, archaeological collection, any other form of art bullion, these things would be considered as capital asset despite of being movable and personal. This is the basic definition. We are still left with these two things. I will continue, but for that matter, I want you all to practice one thing. I want you all to identify whether it is a capital asset or not. I'm just asking you to find out. Okay. See, if I have a car used in business, If I have a car used in business, will it be a capital asset or not? Everybody has to answer. It is an activity like you do in MCS. It is an activity. You have to answer every question. If I have a car used in business, will it be considered as capital asset? Yes or no? Yes or no? Yes or no? A car used in business, whether it is a capital asset. Sir, this I am only telling. Okay? Yes, sir. Yes, sir. First of all, it is all asset. Yes, it is all asset. Is it stock in trade? No, sir. Is it movable plus personal? No, sir. It is not personal. Is it rural agriculture land? No, sir. That means it is a capital asset. Yes, sir. It is a capital asset. Everybody says the same. Even Bhaskar, Neha, Harish, everybody says it is capital asset. Now, for example, I have drawn a painting. Let me tell you the background of this painting. Let me tell you the background of this painting. One day, I was just painting a donkey. I was just painting a donkey. Okay. One donkey I was just painting. I drew a donkey. I drew another donkey. And this donkey was over and above the original donkey. And I drew myself over and above this. And I drew India over this. Okay. I drew a donkey, another donkey, and myself, and over me India. And I named this painting as Assassination. A donkey over and above other donkey, over and above that it's me, and at last it is nation over and above me. Wrong. As I nation. It is assassination. I named this painting assassination, and as soon as I drew this painting, people went crazy just to watch this. People from United States, people from America, people from Kazakhstan, people from multiple countries are just coming to watch this assassination painting. Oh my god! Oh my god! Just these small hands crafted such a painting that became comparison to Mona Lisa painting. People are coming to watch. It is such a beautiful painting. Once a saw cannot be unseen. Once a seen cannot be unseen. My question to all of you is whether this painting is a capital asset for me or not. If I sell this painting, if I give this painting free of cost, will capital gain be levied on this or not? That is what my question to all of you. Sir got rich. Array, I'm rich with students. I'm rich with students' feelings. Despite with no money. Paisa wala rich. Auction. That is different matter. I am asking whether will this be a capital asset or not. That is what my question to you is. Yes, sir. Yes, sir. Bhaskar said, Neha said, yes, it is a capital asset. Yes, it is capital asset. Everybody said it is capital asset. I went to London. I tried to rob the Kohinoor diamond and came back in India. Kohinoor diamond. I have Kohinoor diamond with me right now. Government is trying to take away that Kohinoor diamond. I took from government. Crazy art. Crazy. Thank you so much. Okay. Government tried to take away Kohinoor diamond from me, which I stole from government of London. And government wants to take away. Whether that Kohinoor diamond that I have and government is willing to take that Kohinoor diamond, whether will that be a capital asset for me or not? If government is compulsorily acquiring. If government is compulsorily acquiring that Kohinoor diamond, will that be a capital gain in my hands? Will that Kohinoor diamond be a capital asset in my hand? Right answer is. Right answer is. Yes, it is a capital asset. Everybody said, Kevin has said, yes, it is a capital asset. Capital gain would be applicable. If I have a Kohinoor diamond and government is trying to take away from me, since Kohinoor diamond I robbed, but it is a jewelry, it is a kind of precious stone, it is a kind of capital. Okay. Yes, absolutely clear. Sir, ठीक है. Now I have a business. Okay. Business. I have a big business. I have a business. What, for example, I make toilet accessories. I make when you go to for example hotel room. If you see there is a bunch of things kept. You will see a small shampoo, small soap, small perfume. You will see a small slipper. I make that. I have that business. If I want to sell that business, whether that business will be a capital asset or not. Sale of a business. Whether will it be a capital asset or whether it will be any other thing. Whether sale of business. See, business includes stock in trade. Business includes stock in trade. So selling of a business will be a capital gain or will it be any other head? Will it be a capital asset or not? That's what my question is. Sir, sale of business, whether it is a capital asset or not, that is next question. Harish says capital asset. Yes, sir. Yes, sir. Yes. Not wasting much time. Let me tell you the basic reason. Your core definition for capital asset is any asset is a capital asset. Whether business is any asset, right answer is yes, business is any asset. Whether this business is stock in trade, Are Baba, business does not imply stock in trade. Business imply multiple other things like debtors, like investments, like a land and building, like plant and machinery. Business has multiple aspects. Therefore, business is a bunch of activities and it falls under any assets. Therefore, it is considered as a capital asset only. Are we clear? Business does not mean just a stock in trade. Business does not mean just a movable personal assets, but business implies bunch of activities. Therefore, it falls under the category of any asset. Therefore, business is a capital asset. Okay, not deep, not getting into depth. Now we have debentures. For example, I have debentures of a company. Whether this will be a capital asset? In case of sale of business, and PGP running business, it is not always PGPP. Stock sold, stock sale is PGPP. But if you do lump sale, if you harvest any biz unit, then it is considered as capital gain only. Even if you sell stock in trade in a business, no, then it is PGPP. But if you sell entire business, it is considered as lump sale. Debenture is a capital asset. Yes, sir. Any asset is a capital asset. Therefore, debenture is also a capital asset. Okay, sir. No issue. One day, I was sitting in my backyard. One day, I was sitting in my backyard, just resting on a tree. All of a sudden, I felt a nail below me. If you have heard of that song, "Kanta Laga Uima Uima Uima," I felt a nail behind me. I just I just dug that nail, and I found a nail of a dinosaur in my backyard. This big nail I found, a dinosaur nail in my backyard. I found whether that dinosaur nail would be a capital asset for me or not. I was resting, I was lying down in my backyard. All of a sudden, I felt a nail. Whether that nail will be considered as capital asset or not. Yes, sir. Archaeological collection. It is a capital asset. Archaeological collection. Beautiful answer, Harish. Beautiful answer. Archaeological collection. Yes, it is a capital asset. I have this beautiful set of notes. I have this beautiful set of notes. Beautiful set, beautiful set. I mean, I can get flattered just by looking at these notes. Whether these notes are capital asset for me. I have this beautiful set of book, beautiful set of concept. I mean, beautiful colorful and beautifully crafted, handwritten, and multiple aspects this book has. Whether this book is a capital asset for me, value will keep increasing. Value will keep increasing. Value increasing. Depreciable, appreciable is not relevant, Neha. In income tax, we do not consider appreciable assets as. See, depreciable assets are also capital asset in income tax, so it is not relevant. Value will keep it. Okay? I have this beautiful set of books. Whether this will be considered as capital asset or not. Beautiful book. Colorful book. If you look at this book, you will find multiple colors, multiple charts, multiple diagrams, everything simplified in very simple language. Just tell me whether this book for me is a capital asset or not. Malishwar says yes. Malishwar says yes, 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 capital asset. Malishwar says. Harish says no. Hevana says no. Bhaskar says no. And right answer is no, it will not be a capital. First of all, it falls under any category, any assets? Yes, it is any assets. Whether it should be capital asset? Ideally, it should be. But since it is stock in trade for me now, it is stock in trade for me now. I have a business of selling books. So for me, it is stock in trade. Therefore, it is not a capital asset for me. It will be under exclusion. It is stock in trade. Now, just turning the tables around. If you have this beautiful book that is available to you at the lowest possible cost, if you have this book, then whether this book is capital asset for you or asking from you, from your point of view, if you have this book, whether it is capital asset for you or not. If as a student you have a concept book, whether it is a capital asset for you or not. Wanted to know the answer. For it to know the answer. Bhaskar says no. Concept book for you is not a capital asset. Eh? Bhaskar says no. Anjana says no. Why? Why? Hey, Papa, sir, we got the concept now. Any asset is a capital asset. Okay. Personal property has to be excluded. Na? It is movable and it is personal. Na? A book for us is movable and it is personal. So it has to be excluded. Therefore, yes, you all are correct. It is personal item. Therefore, it is to be excluded. Neha. Now, can I say, will you be able to identify? I mean, you will be able to identify what is capital asset and what is not. What is a capital asset and what is not. What is not the capital asset? Assets are not capital assets. I hope you will be able to identify. I hope you will be able to identify from now onwards. Sir, we got that. We got that point. Remember, if you have utensils made up of silver, silver utensils are considered as personal effect. They are not capital asset. But if you have gold utensils, if you eat in a plate made up of gold, you eat made up of a plate made up of diamonds, then is it a capital asset? Right answer is yes. Only silver utensils are not considered as capital asset. Otherwise, every other utensils are considered as capital asset. If you have gold utensils, if you have diamond utensils, they are capital assets only. Okay, got that point? Yes, sir, we got that point. Apart from these four things, provision says any securities by FII in India are capital asset. See, let me tell you the basic reason. Yes, sir, clear. Let me tell you the basic rationale. Anything that is categorized as capital asset will have lesser tax rate. We understood with multiple examples now. If you have any business income, it is taxed at 30%, 35%, 25% for other SSC. But if it is a capital asset and we have long-term capital gain, it is just taxed at 12.5%, 20% is just taxed at this rate. So any asset which is considered as capital asset is considered as capital asset only because government wants to reduce tax rate on such thing. Therefore, provision says if any FII invest in India, foreign institutional investors invest in India, for them benefit is given, whatever securities they invest in would be considered as capital asset only. Why it is considered as capital asset? Because government wants to give a tax benefit of lower tax rate. If FIIs buy securities, sell securities on regular basis, they would be charged to 35% tax rate now. Therefore, provision says for them it is explicitly mentioned that any securities held by them would be capital asset irrespective of period of holding, irrespective of any kind of volume of sale. The third pointer that we assume capital asset is ULIP. In some cases, I will tell you what we have discussed. We have a topic. We'll discuss this later. ULIP is also considered as capital asset. Which ULIPs are considered, we'll discuss later on. But right now, did we understand what is capital asset? First of all, any asset is a capital asset, but exclude four. First of all, stock in trade is to be excluded. Movable personal assets are to be excluded. Rural agricultural land is to be excluded. Gold deposit bond and monetization certificate are to be excluded. Remember, Despite of all these four, any jewelry, drawing, painting, sculpture, archaeological collection are considered capital asset. And apart from that, any securities held by FIIs are always capital asset, and unit-linked insurance policies are considered as capital asset in certain cases. This all is the definition of capital asset. Moving further, sir, what is a rural agriculture land? What is rural agriculture land? Sir, rural agriculture land is to be understood in this way. Identify the area governed by governed by municipal corporation. If any area has municipal corporation, if any area has municipality, any area is a cantonment board. What is cantonment board? It is army base. If you are aware, if you live nearby Indore, then an area called Mahu is the army base. It is a cantonment area. If you live near Nagpur, there is Kamti area, which is a cantonment board. If you live near Jodhpur, there is a cantonment board there. So if any area which is governed by municipality, municipal corporation, cantonment board, that area is absolutely urban area. Am I making this very clear that any area governed by municipality, cantonment board is urban area? Plus, in addition to that, if population of that area is up to 10,000, then that area is the only urban area. What did I just say? I'm repeating myself. Area covered by municipality, municipal corporation, and cantonment board is always urban. But if population is up to 10,000, then area is only urban. What do I mean to say? If population increases by 10,000 to 1 lakh, provision says whatever the municipal limits are, beyond those municipal limits, 2 kilometer area shall also be urban area. This shall also be urban area. That means whatever municipal limits are, municipal corporation limits are, cantonment board limits are, they are always urban. They are always urban. But if population is up to 10,000, then that area is only urban. But beyond that will only be urban if population exceeds 10,000 up to 1 lakh rupee, 1 lakh people. If population exceeds 1 lakh, if population exceeds 1 lakh to 10 lakh, provision says beyond municipal limits, 6 kilometer area would be urban. And if population exceeds 10 lakh, then provision says 8 kilometers area from municipal limits would. Provision says as soon as you will be able to define the urban area, any area beyond urban area would be rural area. Are we able to understand what is urban area, what is rural area? What is urban area? See, it is important for us to understand why, because any area which is urban area is only tax. If it is rural area and it is agricultural land, it is exempt. It is important for us to determine whether it is urban or rural. Once we are able to identify rural area, then we have to check whether that land is used for agriculture. If it is used for agriculture, then it is exempt. So this is how we will be able to identify whether it is urban rural agriculture land or not. I'm again repeating the point. Find out whether that area has municipal limits, cantonment boards, or municipal corporation. Whatever the area that municipal corporation has will always be urban. And if population is up to 10,000, that area will only be urban. But if population exceeds 10,000 up to 1 lakh, then beyond municipal limits, 2 kilometer area would be urban. If population exceeds 1 lakh up to 10 lakh, then 6 kilometer area beyond municipal limits would be urban. And if population exceeds 10 lakh, then 8 kilometer area beyond municipal limits would be urban. This is what. Radhe Radhe, sir, and bye bye. Why bye bye? Kanika, just sit now. Just sit. Okay. Kanika became chartered accountant in this attempt, in this September 25 attempt. She has just come to say hello. So, hello, Kanika. Radhe Radhe. So, this is what a rural agriculture land is called. Now we have third definition. What is transfer? For that, let's come to book. It is not the thing that we need to more focus. It is very simple point. What it says: if you have any asset, it is considered to be transferred if you are selling that asset. If you have any asset, you are exchanging that asset for another asset. It is called transfer. For example, if I have iPhone and I have that iPhone and I am giving that iPhone to Harish, and in return I am asking a buffalo in return, which would fetch 2 5 kg of milk every day. That is what we are exchanging for. Vision says that is also considered as transfer. If I have any asset and I am relinquishing any asset, for example, relinquishing matlab letting go the asset. For example, if I have a house and out of satisfaction, out of happiness, out of so much of superior feeling, I just gifted my house to Neha. I thought, what do I do of this much earning? I have earned sufficient amount. I'm taking that way. So for that matter, what I did, I gifted my house to Neha. Provision says even if you are relinquishing the asset, you are gifting the assets, you are letting go the assets, then too it is considered as transfer. That means gifting also amounts to transfer. Provision says extinguishment of rights in any asset. What does that mean? For example, if I have shares in a company and that company comes up with liquidation or company goes into liquidation, against my shares I will receive money. That means right in company are being extinguished. Are you understanding? I have a right in company, I have voting rights in the company, and that rights in the company are being extinguished because that company is into liquidation, because that company proposes buyback. Provision says that would be considered as extinguishment of right, and any such extinguishment would also amount to transfer. Compulsory acquisition of capital asset. You are not aware. You are not aware. Do you know Adish sir? Do you know Adish sir who teaches AFM at FAST? Do you know Adish sir? He appears very smart. He appears very a simple person. But back end, he is a devil. He is a devil. He has big, big farms of opium in Kerala. You are not aware. He has big, big farms of opium in Kerala. On face, he is teaching AFM. He is teaching AFM just to look cool, just to show people that what he does. But in fact, he sells opium in Kerala. You are not aware. All of a sudden, he is a very good teacher. Yes, I am aware. But that is only the face of him. You are not knowing the back end reality. I am telling you. No. I am telling you the back end story. He sells opium in Kerala. He has big, big farms of opium. One day, Kerala government said they will not bear this. Government said, Adish sir, I want all of your farms. We want all of your farms, and we will construct the Ram Mandir there. So government is obsessed with Ram Mandir. So government said, Adish sir, we are taking every farm of yours on which you grow opium, and in return we are giving you certain money, and we will develop a Ram Mandir in those opium farms. Provision says any such compulsory acquisition shall also be considered as transfer. For Adish sir, if he is not willing to give, but if he has been compulsorily acquired any asset, then it shall be considered as transfer only. I know, sir. I buy from him. See, bad. See, this is the back end story. We are not supposed to reveal, but he will be very angry when I tell when he'll see this. For example, conversion of capital asset. For example, sorry for every example. Every example that I take is just for humorous purpose, just to make you understand. Don't feel any sorry. I mean, don't feel angry about the examples. For example, Rahul. Rahul. Okay. Rahul, as Rahul was born, her mother used to save 10 grams of gold per month. 10 grams of gold per month she used to save. That even if Rahul does nothing in future, he will have sufficient gold to sell out and start a business. Rahul's mother used to save 10 grams of gold every month so that as Rahul would grow old and if he does nothing, he would still have certain gold to start any business. And as Rahul grew 25, I mean 24, as Rahul grew 24, what he did, instead of selling that gold, he converted that gold and started making rings, started making jewelry. Provision says conversion of a capital asset into stock in trade would also amount to transfer. Allowing possession of immovable property in part performance of contract. What does that mean? For example, if I have a land, okay, if I have a land and I want to sell this land to Kevana, I want to sell this land to Kevana. Example. We had an agreement that I will be selling this land after 4 years. I have an agreement, but I have given the possession. I have given the possession to Kevana. She has given me 1 lakh in return, and later payment she will be doing after 4 years. What this agreement is, try understand this agreement. Our agreement is to transfer the house after 4 years. After 4 years, registration would take place. After 4 years, entire payment would be made. Right now, Kevna has only paid me 1 lakh rupees, and I have given the possession of my property to Kevna. Provision says if you have given possession of immovable property, sir, whether consideration fully has been received or not is not relevant. Whether registration of house is done is not relevant. If you have given the possession, it amounts to transfer. Handing over the possession amounts to handing over the possession of the property amounts to transfer. If some money has been received, whether registration is done or not relevant. Any transaction which has effect of enabling the enjoyment of immovable property, what does that mean? What does that mean? Let me tell you. In big cities like Mumbai, like Chennai, there is lack of space. So multiple people come together and form cooperative societies, housing cooperative societies they form. Now what happens is when they construct the cooperative societies, these cooperative societies are not registered in the name of individual owners. I mean, for example, we have 100 flats in a cooperative society. Now each flat is not registered in the name of individual owner. For example, I am Rahul. I have a flat in society, cooperative society. Now in municipal corporation documents, now my name would not reflect it. My name would not be reflected. Rather, name of society would be reflected, and society's internal bylaws would suggest my name. What I'm saying is, whenever I own a property in a housing cooperative society, my names are directly not given in municipal corporation documents. Rather, my names are in society documents, and in government official pages, society would be considered as owner. I am only given a membership certificate. Provision says if I have a membership certificate in a cooperative society, which gives me a benefit of living in that house. Provision says any transfer of such membership certificate which gives you enjoyment of immovable property, such membership certificate transfer is also considered as transfer. That means you are not actually selling a house. You are just selling a membership certificate. That membership certificate transfer would also be considered as transfer. And at last, we have zero coupon bond. Redemption of zero coupon bond is not IFOS, it is not PGBP, it is always capital A. Basic point it is. Based on the above definition, we can simply conclude that if we have any asset which is being destroyed, for example, if I have a house and that house got burnt, provision says destruction amounts to transfer because it is an extinguishment in right of an asset. Asset is relinquished, therefore destruction also amounts to transfer. Liquidation also amounts to transfer because I had rights in the shares of the company and company got liquidated. So my rights are extinguished, therefore liquidation also amounts to transfer. I had shares in a company and company bought back those shares. Again, it is extinguishment of rights in the company. Therefore, it is also a transfer. Slum sale, I am selling a business. Actually, it is for consideration only, not so it is a transfer. Sir, if I am not just selling, exchanging, but if I'm disposing of any share, any asset, if I'm parting assets into multiple parts, if I'm creating interest, for example, if I have a house and I have given this house on rent to Rahul. I have a house. I have given this house to on rent to Rahul for 200 years. Then shall it be considered as transfer? Right answer is yes. If creation of interest is as such that it appears to be transfer, it would be considered as transfer. Sir, whether you do it directly selling, it would be considered as transfer. If you would sell it indirectly implies indirect transfer. We will study in NR taxation. That would be also considered as transfer. If you do it conditionally, unconditionally, whether by agreement or not by agreement, everything would be considered as transfer. Crux of this topic is not relevant because this is not what is going to be asked in exam. This is not going to be asked in exam. To be honest, this is not the thing that will be asked in exam, at least at CA final level. We have next topic, that is types of capital asset. Anybody having any doubt in definition of transfer? Anybody having any doubt up to? This is important for your attempt. At least for your attempt is it is very important. Anybody having any doubt? Arey Anna, if you have any doubt, just ask me, or if it is clear, just mention me clear. All clear, sir. All clear. Neha says all clear. Anjana says all clear. Everybody says all clear. Everybody says all clear. Now what happened? All clear, sir. All clear. Everybody says. I'm not mocking with your accent. Not mocking, but it is addicting. I really enjoy saying in that language. So please don't get offended if I say that accent. Now, type of capital asset, what it says. What does that imply? Ultimately, we have two kinds of assets. First of all is short-term capital asset, and the other one is long-term capital asset. Okay, all clear, sir. All clear. Sir, short-term capital asset and we have a long-term capital asset. Normally, what happens is whenever you sell a short-term capital asset, we have a short-term capital gain. We have normally short-term capital gain. And when you sell long-term capital asset, we have long-term capital gain. Of course, there are certain exceptions, but basic is this only. When you sell short-term capital asset, you have short-term capital gain. Tax rate would be 20%, 15%, or slab. If you sell long-term capital asset, tax rate would be 12.5%, 20%, 10%, as the case may be, depending upon asset. This is basic difference. Long-term capital asset would yield. Can you provide some examples of rural agricultural land? Example of rural agricultural land. Okay. For example, this is Indore. This is Indore. And near Indore, there is a village called Sannood. This village is 10 kilometers away from municipal limits. If I have a land in Sannood, if this land is used for agriculture purpose, this is agriculture land. If I have not used this agriculture land, I am using this. If I have if I have used this land for residential purpose, or I am doing business, or I am using go down, I am doing using anything, then it is not an agricultural land. It is rural land for sure, but it is not agricultural land. So this would attract capital gain. Agricultural land would not attract capital gain. Anu Amir, did you understand with this example or not? Naresh, did you understand with this example or not? So what did I just say? What did I just say? I just said that if you have any doubt, now just mention the doubt. So I will be in a state to understand exactly your doubt. I took the example. I think it is not the area on which much focus should be given, but since it is important, I just told the original definition. We have types of capital assets. We have two kinds of capital assets. First one is short-term capital asset that would yield short-term capital gain. The other one is long-term capital asset that would yield long-term capital. Naresh, Anu, if you have any doubt, now just mention the doubt properly. If you have any specific doubt, mention. If anybody else has doubt in this agriculture land, just tell me. So otherwise, I will emphasize more on this point. Now, what is short-term capital asset and what is long-term capital asset? What is short-term capital asset and what is long-term capital asset? That has been defined because with period of holding. For every asset, there is a defined period of holding. There is specified period of holding. If you hold such asset beyond that period, it would be long term. If you hold that asset for less than that defined period, it would be short term. And what is that defined period of holding? That undergone change. That undergone change. Let me tell you what. To 22nd July 2024, we had different period of holding, and with effect from 23rd July, we have different period of holding. I will tell you everything, and we will take examples of this point also. No, don't worry. What used to happen was any securities other than units of business trust on listed on recognized stock exchange in India Equity oriented mutual fund. Zero coupon bond. Units of UTI. Any shares other than one immovable property. Other. What provision says for all these four assets, if you hold for more than 1 year, they are considered as long-term capital assets. Less than or equal to 1 year, they are considered as short-term capital assets. For these two assets, we had period of holding for more than held. If they are held for more than 2 years, they are long-term capital assets. If they are held for less than or equal to 2 years, they are considered as short-term capital assets. And for any other asset, we had period of holding greater than held for 3 years, long-term capital asset, less than or equal to 3 years, short-term capital asset. Everything is mentioned in the book. Need not to worry. Everything is mentioned in book. Simple. This was the case up to this was the case up to 22nd July 2020. Shall we repeat again? Shall we read it together? Any securities other than units of business trust, state on recognized stock exchange in India, any equity oriented mutual fund, any units of UTI, any zero coupon bond have to be held for 1 year to make it long term. More than 1 year, it will become long term. If held for less than that period, it will be short term. Any shares other than first point, any immovable property have to be held for 2 years, and any other asset have to be held for 3 years. This would be a period of holding for all the assets up to 22nd July. Anybody having any doubt? Anybody having any doubt? Up to 22nd July, this was the case. That means if any of the transfer took place up to 22nd July, in your question, you have to identify based on the date of sale. You have to identify whether it is long-term capital asset or whether it is short-term capital. Anybody having any doubt up to this point? What did change after 22nd July? I'll answer. First of all, tell me, anybody having any doubt up to this point? Anybody having any doubt? Listed securities other than recognized stock, other than units of business trust, equity oriented mutual funds, zero coupon bonds, units of UTI have to be held for 1 year. If held for less than 1 year, it shall be short term. Any other shares? Any other shares? Any other shares? It can be unlisted. It can be preference shares. Any other shares to be held for 1 year. Sorry, so I have to be held for 2 years. Immovable property 2 years. Other assets 3 years. This was case up to 22nd July. But what happened from 23rd July? Nimotai came. Nimotai, our finance minister, our beloved finance minister. No haters she has today right now. No haters she has. What she did? Yeah, she said there are too many complications in this provision. There are too many complications. I don't understand these provisions. He said, why to make it complicated? Why to make it complicated? Remove this category of 3 years. Why 3 years? Every other asset will have 2 years. No 3 years as of now. No year 3 years as of now. Anna, no 3 years as of now. And what is this? What is this others and units of business trust? Why? Every listed security would be 1 year. And this is what is effective from 23rd July 2020. Everything is same except two things have been changed. One thing, units of business trust are brought into category of 1 year. And second thing, any other assets which were earlier to be held for 3 years, now to be held for I will take multiple examples. I will ask multiple I will ask multiple questions to make you understand. Don't worry at all. This is important provision. We'll deep bigger in. We'll more deep dive into in this topic. Okay. Let me tell you with one example what the case is. For example, we have with us Mr. Kevina, Miss Kevina, or I should say anybody. For example, Rahul only bought gold on 1st April 2020. I bought gold and I want to sell this gold on 20th July 2024. I want to sell this gold on 20th July. Now I want you all to answer if I sold this gold on 23rd July 2024, whether this gold was short-term capital asset or long-term capital asset. I held it for 2 years and maybe 3 months. I sold the gold on 20th July 2024. Whether this asset is long-term capital asset or short-term capital asset. See, since transfer is being made before 23rd July, na, transfer is made before 23rd July, so old provisions would apply. And as per old provisions, gold fall under any other asset. See, gold is not a listed security. Now, gold is not equity oriented mutual fund. Gold is not zero coupon bond. Gold is not UTI. So 1 year period of holding would not be checked. Gold is not any other share. Gold is not immovable property. So 2 year of period of holding will not be checked. We have to check 3 year of period of holding. For gold, if sold before 23rd July, would be checked for 3 years. Would be checked for 3 years. And since I have not held this gold for 3 years, it is short-term capital asset. But what if I sold this gold on 24th July 2024? Just the next day of budget. Just the next day of budget. Just the next day of budget if I sold the gold. Sold the gold. Wow. Now provisions changed. Now we don't have a concept of 3 year of period of holding. Any asset which was held for 2 years will become long term. And since I have held the gold for 2 years, it would become long term capital asset. And this is what changed. This is what changed. If you sold the asset before budget, you might have been checking for 3 years. But now you have to check for only 2 years. So this is the change. Did you understand this point? Did you understand this point? Now, can I say this? Can I simply summarize this? That earlier gold was checked for 3 years, but with effect from 23rd July, it has to be checked for 2 years. Can I say 3/2? Can I say 3/2? Can I say 3/2? Just answer yes or no. Just answer yes or no. Whether can I check 3/2? Can I check this? Oh, if say yes, you will be caught. Yes, sir. Of course, of course, of course. Let's do some hard work. First question, gold. Earlier, it was to be held for 3 years. Now it has to be held for 2 years. Before 23rd July, it was to be held for 3 years. Now it has to be held for 2 years. I answered this. Now you tell. How much Reliance shares are to be held before budget and after 23rd July, how long it must be held to make it long? Did you understand the question? Sir, did you understand the question? Before 23rd July, to make Reliance shares as long term, we were supposed to hold these shares for at least 3 before 23rd July, we were supposed to hold Reliance for 1 year. After 23rd July, also I have to hold Reliance for 1 year. So for Reliance, answer would be 1:1. It would be the period of holding. Budget period of holding for Reliance has not changed. 1 year is to be checked before budget, and 1 year is to be checked after budget also. Now you have to answer Facebook shares. How long Facebook shares to be held? How long Facebook shares are to be held? This is the full first. Second question, everybody is answering correctly. Anjana is answering correctly. Malishwar. Malishwar is answering correctly. Ramya is answered correctly. Now point is second wala. Now third question that Harish said 2:2. 2:2 is being said by Harish. I'm saying this third point. Third, huh? Third. You can answer like this 3.2 is to 2. 2 oblique 2. 3.2 oblique 2. So that I'll be able to understand that you are answering third question. While Ishwar says, see, if I'm correctly pronouncing your name, just tell me. Huh? While Ishwar says the same thing, Devana says the same thing, Anjana says the same thing. And yes, you all are correct. You are not wrong. See, Facebook earlier was also unlisted. Facebook was not listed in recognized stock exchange in India. Na? Facebook was not listed on recognized stock exchange in India. It is listed in Nasdaq. Earlier also it was falling under the category of any other share. Right now also it is falling under the category of any other share. Nothing has changed. 2 is to 2 is the answer. Now my question is, I have debt oriented mutual funds. Malishwari. Okay. Malishwari. Okay. Malishwari. Now I have debt oriented mutual fund. Now tell me how long these should be held. How long these were to be held to make it long term, and now how long these should be held to make it right in this manner. 4 point whatever your answer is. Let's see. Let's see. Let's see. Naresh says 2 is to 2. Okay. Malishwari says 3 is to 2. Anjana says 2 is to 3. Hai? Anjana 2 is to 3. Ramya 3 is to 2. Ramya. Devana says 3 is to 2. Now let's find out. Let's find out now. The debt oriented mutual fund. If I carefully examine any securities listed, did does question mention that is it listed or not? We have to assume it unlisted unless it is specifically. Is it equity oriented? Are na baba, debt is debt oriented, not equity oriented. Is it zero coupon bond? No sir. Is it units of UTI? No sir. So 1 year is not to be checked. Does it fall under any other share? Are baba, you equity oriented, debt oriented mutual funds are not shares. Debt oriented mutual funds are not shares. These are not shares. These are mutual funds. So 2 years not to be checked. Is it immovable property? Earlier it has to be checked for 3 years, but now since 2 years has to be checked for everything, so 3 oblique 2 would be answer, and that would be correct. Malishwari is correct. Ramya is correct. Anjana, Keval, everybody is correct. Naresh, improvement rate. Next, let's answer the third next one. Don't answer this fifth one. Answer the sixth one. Units of business trust. If you have units of business trust, earlier before 23rd July, how long you were supposed to hold them? And after 23rd July, how long you are supposed to hold them to make them long term? This is a beautiful point. Perfect, 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 Naresh. Now answer this point. Units of business. 6 point. You have to answer 6 dot 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 and continue with. Very beautiful. Very, very, very beautiful, Maleshwari. Very beautiful. Maleshwari said 3 is to 1. 3 is to 1. And she's correct. Absolutely correct. How do I say she's correct? Just think of this. Provision earlier used to happen was any securities other than units of businesses. That means earlier any securities to be checked, but business trusts are to be excluded from this 1 year of period folding. Business trusts were not tested for 1 year. Business trusts were earlier tested for 3 years because they were exclusively excluded from this 1 year period of holding. Earlier, we used to have any securities other than units of businesses are to be checked for 1 year. That means businesses are to be checked for 3 years. And later on, this other than businesses was removed. So 1 year 1 year period turns out to be. And we are already aware. We are already aware. If not, we'll study this that every units of businesses are normally listed. They are assumed to be listed units of which are normally listed. In this case, 3:1 turns out to be. 3:1 turns out to be. Asker says the same. Kevina, okay, did not say. Anjana said something differently. This is what I mean to tell. Business trust unit earlier were to be checked for 3 years. Why 3 years? Because they were exclusively excluded from 1 year definition. Right now they are not excluded, so 1 year to be checked. Now important point is building. No issue. No issue, Kevina. Now answer next one. Point number 7. How long a building is to be held to make it long term? How it was, how period of holding was before budget and what it turns out to be after. Let's see how long this building is to be held to make it long term and later on. Hmm. Beautiful, Harish. Wow. 2:2. Let me tell you one thing. It's absolutely okay to write wrong answers. It's okay to write wrong in front of me because I am there to correct you. But if you write an exam, no, nobody's going to correct. It's absolutely okay for me to see wrong answers. For me, I'm assuming that nobody knows the answer, so uh, it is okay for me to see the wrong answers. It's okay. Do not hesitate in writing wrong answers if you don't know the answer. It's okay. I'm saying that it's okay. Harish says 2:2. Malishwari says 2:2, and Ramya says 2:2. No extra points for guessing, sir. Building is to be tested for 2 years. Now we have rural agricultural land. Rural agricultural land. How long rural agricultural land is to be held to make it long term and to make it short term? Seventh, building. Even a building is to be tested for 2 years only. Earlier also, immovable property is a building. Building is to be held for 2 years. Right now also, it is to be held for 2 years. Beautiful, Bhaskar. Even a building is to be held for 2 years previously also, and building is to be held for 2 years even today. Now answer this eighth point. Rural agricultural land. How long this has to be held to make it long term, and how long this has to be held for making it short term. Oh dear Lord, Anjana says, sir, I'm not going to tell it is not a capital asset. Anjana says, no capital asset. Harish says, no capital asset. Malishwari says, no capital asset. Oh my dear God. How can you all be this correct? Absolutely correct. It is not a capital asset. No period of holding is to be checked. No period of holding is to be checked. Since it is not a capital asset, it would not attract capital gains. So period of holding is not relevant. Sir got that. Now answer. I have certain beautiful questions. Now we have Motilal Oswal Nifty 50 mutual fund. Motilal Oswal Nifty 50 mutual fund. Now see, let me tell you a brief background. What is Motilal Oswal Nifty 50 mutual fund? A mutual fund which invests into Nifty 50 index. Okay. Any mutual fund that invests into Nifty 50 index, it is considered to be an equity oriented mutual fund. I am telling you the entire answer only. One is to one. Harish says, beautiful Harish. Beautiful, beautiful, beautiful. Malishwari, Anjana. Everybody says the same thing. If you have equity oriented mutual fund, that must be held for 1 year, even before budget, even after budget, period of holding remains unchanged. It has to be held for 1 year only. Very simple. Now we have next question. Point number 10. Kevin, 10. Kevin, correct. Now we have next question, that is Rahul Limited shares on Chennai Stock Exchange. I have a company, you are not aware of this company. I have a company called Rahul Limited, and shares of this Rahul Limited are listed on Chennai Stock Exchange. Shares of this company are listed on Chennai Stock Exchange. Beautiful, Kevina. We are still here. We are yet to study what equity oriented mutual fund means. But right now, I told you the basics. We have to study this tomorrow. But right now, what my question is, Rahul Limited listed on Chennai Stock Exchange. How long to be held to make it long? How long this asset to be held to make it long? Important question. Maleshwari Anjana says 2:2. Let me tell you. Let's see. Earlier provision was any securities listed on recognized stock exchange in India. Whether Chennai Stock Exchange is recognized, right answer is no. Recognized stock exchange are two only. We have only one. We have only National Stock Exchange and Bombay Stock Exchange that is recognized. Any other stock exchange not recognized stock exchange. So 1 year is not to be checked. And we had provision any share other than first has to be checked for 2 years. Therefore, 2 years period of holding is to be checked in this case, and 2:2 would be answer as you all rightly said. Last question. If you all are able to answer this properly, you will be in a position to assess whether you understood this point or not. We have unlisted mutual funds of Motilal Oswal Nifty 50 mutual fund, Nifty Next 50 mutual fund. That means what this mutual fund is? Mutual fund identifies the Nifty 100 companies, and from 51st to 100 company, this mutual fund invests. And this mutual fund is unlisted. How long this should be held to make it long term before budget, and how long this should be held to make it long term after? Question number 11. Last question of the 11th point. Okay, understood now. Perfect. NSE and BSE. Absolutely correct. I want 11th question. 11th question is unlisted mutual funds have to be held for how long period to make it long term, and how long it has to be held for matlab, before and after budget. Malishwari says 1:1. Harish says 1:1. Ramya 1:1. Why 1:1? Kevina says 2:2. Yes. Why 1:1? Why not 2:2? Bhaskar says 1:1. Are why are you repeatedly saying the same answer 1:1? Why not 2:2? Sir, where in the God's name you said that mutual fund have to be listed to fall under this category? Anjana says 3:2. Where in the God's name you said that mutual fund have to be listed to be checked under 1 year category? I never said. I never said. Whether they are listed, whether they are unlisted, whether they are unlisted or listed, I don't care. It has to be equity oriented to be checked for 1 year. Whether our mutual fund is equity oriented, of course it is equity oriented. It is listed or unlisted. We don't care. It has to be 1:1 only. Now did you get the point? Did you understood the depth of the topic? Naresh, 3:2. No, it has to be 1:1. And why 1:1? Reason is very simple. In nowhere it is mentioned that equity oriented mutual fund has to be listed to be considered for 1 year of period of hold. It is nowhere mentioned. If it is unlisted, then it has to be only equity oriented mutual fund. If it is unlisted only, unlisted also, then to 1 year. And with that, I can say welcome to CA final. Welcome to CA final. This is the depth of the topic we understand in class. Let me take you to the heading from where we started. The class is not done. We have to complete another topic, small topic we have to do. See, we understood charging section. In charging section, we have four parts. Any gain arising from the transfer of the capital asset shall be taxable. Under that, capital gain in the year in which transfer took place. In that, we had a definition of capital asset, which we covered. Three assets are called capital assets. Any assets, FIA securities, ULIP. Any assets, we had four exclusions. We understood that. We understood meaning of transfer. Any sale, exchange, relinquishment, any such thing is called transfer. We understood the rural agriculture land. What rural agriculture land means. Anu and Naresh, did you still have any doubt in your rural agriculture land? Please message me. Period of holding. When asset is considered long term, when asset is considered short term, to make that capital gain long term or short term, we understood period of holding. Period of holding has undergone changes with effect from 23rd July. We understood what provisions were before 23rd July, and we understood provisions after 23rd July. We took 10 or 11 examples just to understand what provision implies. These were the basics. We shall come to computation part. Just to come to computation part, I'm not focusing on the detailed topic. I'm just telling out the basic idea so that tomorrow it will be easier for us to start the difficult portion. How computation is done. How come? Just give me 5 minutes. Just give me 5 minutes. We'll be through. How computation is done. Just telling you an example. If I have this calculator, I bought this calculator for say 200 rupees, and now I am selling this calculator for 300 rupees. In plus, I have paid some wrapping charges. I have paid some improvement charges. If 20 rupees, I have paid improvement. For example, 200 rupees I bought, 20 rupees I did improvement, and I am selling it for 300. What did I just say? I bought for 200, did some fabrication coloring work for rupees 20, and I am selling it for 300. How do we compute capital gain? Is it a rocket science? No, sir. Take the full value of consideration. That means you sold for 300. If you have paid any brokerage on this, just reduce this. I have not paid any brokerage. You have paid any cost of acquisition? Yes, sir. 200 is my cost of acquisition. I have to reduce that. You have done any improvement? I have done painting work. I have to reduce that. 80 rupees turn out to be would be my capital gain. Whether it is short-term capital gain, whether it is long-term capital gain, it depends upon period of holding. If this asset is held for specified period, it would be long-term. If it is held less than specified period, it would be short-term. Is it that difficult to compute capital gain? Is it that difficult to compute capital gain? Basically, not that difficult. It is not that difficult to compute capital gain. We need to understand full value of consideration in certain cases, which make it difficult. We need to understand cost of acquisition, which make it difficult. We need to understand indexation portion, which make it difficult. So there are three aspects which make computation difficult. What are those three aspects? Considering what full value of consideration would be, considering what cost of acquisition would be, and considering what indexation and other provisos would be. These three are the important aspects as to how capital gain is computed. Starting off with the first portion, that is how full value of consideration is considered. How full value of consideration is considered? Very simple point. If I have this calculator, if I have this calculator, I am giving this calculator for 300. What is full value of consideration? Amount received or receivable? Amount received or received, whatever money that I'm about to receive or whatever money I have received, that will be the only full value conversation now. Is it that difficult? Is it that difficult that whatever money I am receiving will be full value concession? Very simple point. It is not technical, not difficult at all. It is not difficult at all. But sir, this is the equation. Full value of consideration minus cost of acquisition would give us capital gain. Now we are in India. People tend to cheat. Everybody's cheating in life. Similarly, you want to cheat government. For that matter, what you would do? You would sell property at a lower rate to reduce this capital gain to lower the tax amount. For that matter, we have three special cases. Section 50C, 50C, 50D. What 50C says? If you have any immovable property, you can sell it at any full value of concession. But sir, you cannot sell it way below stamp duty value. Every property has a guideline value or stamp duty value. You can sell the property at any value, but that should not be very low as compared to, sir, consideration. Your stamp duty value has to be greater than 110% of consideration. This is what this. Sir, for example, I have a property. I have a property whose stamp duty value is 1.1 crore. 1.1 crore. The lowest price at which you can sell is 1 crore only. That means 1 crore multiplied by 1.1%. That means maximum price, the lowest price at which you can sell is 1 crore. Below which, if you try to sell, we will ignore the consideration. We will take the stamp duty value only. That means if SDV exceeds, that means SDV is way higher than your actual consideration. We will ignore the SDV. We will ignore the consideration. We will take the SDV as full value of consideration. That means stamp duty value would be considered as full value of consideration. But sir, but sir, if stamp duty value is lesser than 110% of consideration, that means your consideration is justifiable, then we would take full consideration paid as full value of consideration. It is not very difficult point, very simple point it is. What do I just mean is, if SDV exceeds 110% of consideration, then whatever the consideration is, so whatever the SDVs would be taken as consideration. But if SDV is lesser than 110% of consideration, then whatever the consideration paid would be the full value of. Anybody having any doubt? Let me take some examples. If we have any property whose stamp duty value is 11.2 lakh and we are selling it at 10 lakh rupees, that means stamp duty value is nothing but 11.2. 11.2. Consideration is 11 lakh. We are selling it at a very less price. Sorry, we are selling it at 10 lakh rupees. That means very less price. We are allowed certain limit. Consideration multiplied by 1.1. That mean we should. That mean multiplied by 1.1. Still our SDV is higher. Multiplying consideration with 1.1, still our SDV is higher. Provision says that means you are defrauding government. We will take SDV as full value of consideration. This is what section 50C says, that if SDV exceeds 110% of consideration, that means you are defrauding government. We will take SDV as full value of consideration. Okay. Now, sir, what happens? We have two instances. Okay? We have two or three instances. Let me brief it to you. For example, we have a house. Or not, we have, for example, Anjana. Anjana has a house. Now, her house is worth value very high. Stamp duty value is, let us suppose, of that house is 5 crore rupees. Let us assume stamp duty value of that house is 5. Now, if Anjana wants to sell that house, nobody is buying that house more than 1 crore. Nobody is buying that house for more than 1 crore. Why? Because everybody feels house is haunted. Everybody feels that house is haunted. There is a chudel, there is a witch in that house. It scares everybody. Nobody is willing to buy that house for more than 1 crore. But stamp duty value is 5 crore. Now, what would Anjana do? Just think of this. It is a real life situation. Guideline value of a property or stamp duty value of a property can be very high, but because of some inherent issues, because of some hauntedness, because of some poor location, it might not be worth more than 1 crore. Nobody is going to pay. Now, what Anjana would do? If Anjana would sell, government is going to take 5 crore as 5 crore as consideration, which would be wrong. Which would be absolutely wrong. What options does Anjana has? Anjana can go to valuation officer. Anjana would go to valuation officer and valuation officer would visit the place and determine the SDV. Now assume Anjana, valuation officer went to her house. Valuation officer went to her house and he felt, Arey Baba, this house is really haunted. This house is really haunted. There is a witch that scares everybody. And he reduced the SDV. He said 2 crore is the SDV, below which 5 crore is not the SDV, 2 crore is the stamp duty value. Can Anjana accept this reduced SDV? Right answer is therefore. What I am saying is, if you go to valuation of, if you are not satisfied with SDV, you go to valuation officer, and valuation officer later on reduces the SDV. Can you take the reduced SDV? Yes, you can take the reduced SDV. What if? What if valuation officer entered the house and that valuation officer had different fantasies altogether? He fell in love with that beautiful white witch. As soon as he saw that witch in white gown, white sari, open hair, red tika on her head, thali in her hand, he was laughing, and valuation officer was enjoying her laugh. He was enjoying. He said, all the experiences of Bangkok, Thailand, Malaysia are in this house. This house is not 5 crore. This house is worth 10 crore. Experience at this house is worth 10 crore. 5 crore is very underestimated price. What Anjana is saying, sir, 5 crore, I am not getting 1 crore. 5 crore is SDV. Reduce this. Assessing officer or valuation officer increased this SDV to 10 crore because he thinks that experience is way more worth than 5 crore. Then what would take place? Whether Anjana is bound to accept this increased SDV, right answer is no. What do I mean is, if I am not satisfied with stamp duty value, I have to go to valuation officer. If valuation officer reduces the SDV, we can take the reduced one. If valuation officer increases the SDV, we have to ignore the increased one and we have to take the original SDV, and we cannot do anything about it. Are we clear on this point? Are we clear on this point? Are we clear on this point? Another small question to everybody. For example, this is Rahul. I sold the house. I sold the house. I mean, I made an agreement to sell on 1st April 2024. I will sell the house. I will sell the house for 1 crore, on which stamp duty value was 1 crore. Agreement was 1 crore, stamp duty value was 1 crore. This was the agreement I did. Okay. But I could not materialize, सामने वाला person cannot pay. So our agreement materialized on 1st December 2024, on which सामने वाला person paid me 1 crore rupees. But what happened on that day? Stamp duty value shot up to 1.5 crore. Now what issue is? I made an agreement on 1st April, on which stamp duty value was 1 crore. Consideration decided was 1 crore. But on the date of registration, SDV shot up. Now, which SDV should I be taking? SDV on the date of agreement or SDV on the date of registration? My open question to all of you for a response. Whether SDV on the date of agreement to be taken, whether SDV on the date of registration. Let's see what your answer is. Let's see. Sir, Malishwari says registration. Registration date. Devana says registration. Ramya says agreement. Oh wow. This is what I want. The more you get divided, the more joyful it is to me. The more you divided. Okay, Bhaskar says agreement. Okay, wow, we are absolutely divided, and this is what the beauty of this power batch is. You are getting corrected. Beautiful answer by Harish, and he is correct in all terms. Agreement oblique registration. Beautiful, Anjana. Anjana says the same answer. This is the beauty of the power. This is the beauty of the live batch. that I have this privilege to correct you all in case you are wrong. You cannot say which date. First of all, you cannot say. You have to check whether the buyer has paid any money via account pay check, account pay demand draft, or electronic clearing system. It can be UPI, it can be credit card, it can be debit card, it can be IMPS, any money via account pay check, demand draft, electronic clearing system. If it is received on agreement date, then take agreement. If it is received after agreement on registration date, take registration date. Date on which money is received, and that too via account pay check. Cash is not considered. Cross check, bearer check is not considered. Has to be taken via account pay check, demand draft, electronic clearing system. That date will be considered. Therefore, whoever says agreement, whoever says registration is incorrect because it is the conditional answer based on the payment made. Sir, in exam, though we will be getting the date now, so we will not be making any mistake. No issue. I know you will be writing correct answer, but it is my duty for you. It is my duty to tell you that you cannot be this straightforward in just answering. That was all about 50. What 50 CA says, if you are selling any unlisted shares, if you are selling any unlisted shares, then what to do? Then what to do if you are selling any unlisted shares? What to do? Provision says whatever the sales prices or whatever the FMV is. How FMV is determined? FMV is determined based on merchant bankers or chartered accountants report. Whichever is higher, you have to consider for the purpose of unlisted shares. Unlisted shares are prone to manipulation. People would reduce the sales consideration, and for that matter, capital gain would reduce. Therefore, for unlisted shares, we have FMV or sales price, whichever is lower. Remember that this provision is not applicable to the companies whose board of director has been suspended by central government. Okay, sir, we got that point. Last point 50. Let me tell you one thing. Let me tell one last example of the day, and we'll be done for the day. What happened is we have a company called Hindustan Unilever. Take care. Hindustan Unilever's director, the senior most managing person, was uh, was going on a trip. And what happened was he was walking on a beach. All of a sudden, he felt something on his leg. He said, "Ouch, ouch!" All of a sudden, an ouch came from his mouth. He just looked, and something was really shining, and that was a gold chain. That was the gold chain. Okay, got it. Now, what happened was he received a gold chain, and all of a sudden, there was a marriage on one of his family. I mean, the marriage was taking place in his family. He gifted this chain to somebody else. Provision says whether this would attract capital gain. Right answer is it should attract capital gain. But if you are gifting this property to somebody else, or if you are gifting this property, or if you are giving this property at a low consideration, how would you determine the full value of consideration? Provision says, provision says, fair market value on the date of transfer has to be taken. Fair market value on the date of the transfer has to be taken. That means if you are giving this chain against something else, then fair market value has to be considered. Any asset on which sales price is not determinable, now fair market value is to be considered. Let me tell you one more example. For example, I have a iPhone. I want to give this iPhone to Anjana, and in return, she is giving me a buffalo. Provision says how do we calculate the fair? How do we calculate the sales price full value of concession? Provision says FMV on the date of transfer. Whatever asset received, whatever asset that I'm receiving, fair market value of that will be considered as full value of consideration. That would be considered as sales. The fair market value is to be considered as full value of concession in case fair market value sales price is not determined. What did I just say? See, normally price received is full value of consideration, but we have three super special cases. First of all is 50C, which says if any immovable property is transferred at a lower consideration, then we have to check SDV exceeding 110% of consideration. Then SDV shall be full value of consideration. In other cases, if SDV is lesser than 110% of consideration, take consideration paid. Or if you are not satisfied with the SDV, go to valuation officer. He may increase, he may decrease. If he decreases, take the lower one. If he increases, take the original one. Date of agreement or date of registration, it depends upon the payment received or not. In case of unlisted shares, FMV or sales price, whichever is higher. In case of any other transaction, their sales price is not determinable. Consider consider the FMV of the assets. With that, we completed three full value of consideration provisions. Tomorrow we will start with cost of acquisition, we will start with provisos, we will try to understand the special cases, we will try to understand the exemptions and tax rate, we will try to cover majority of the capital gain tomorrow. Not just tomorrow, but day after tomorrow. On Monday we'll have next class. Tomorrow's on Sunday. You can relax. You can prepare yourself. You can recall these things. You can be prepared for next class also. Tomorrow we'll not have any class. Now, important pointers. 1 or 2 minutes. Just last important pointers. This class is only a portion of the entire batch. We are going to cover entire income tax in this funny manner only, in this interactive manner only. And also, whatever you feel, but what was this a tiring experience for you all, or was this a joyful experience to you all? You tell me. Because sitting for 4 hours 20 minutes for an income tax class has been literally not thoughtful for me when I was a student, but I have been able to do it because students support me. So if you feel like, sir, this much amount of class, this much content we are able to absorb today, and most often, most probably, you will be able to absorb every day because we do in a very funny manner. If you feel like this much class was sufficient, we will have longer classes. If you feel like, nahi sir, we want to have shorter classes, you can increase the number of classes. I'm also open to that. Just give me suggestion. But for sure, you will enjoy. You will not feel where did time go. You will not even know where did time go. You will just enjoy the batch. That is what might. If you have even not enrolled, just consider enrolling for this batch because you will have income tax on your tips. You will have entire DT on your tips with these examples, with these cases, with these different case scenarios, and with these positive learning. So, thank you so much coming. Thank you so much for coming. That's all from my side. Tomorrow we'll not have class. Day after tomorrow, Kishore says, "Sir, class is very good. Please keep it from 6 a.m. so that class will be completed by 10 hour. It would be helpful." See, let me tell Kishore, I'm really sorry for this much or for this timing. What happens is na, I my other class overs at 10:30. 10:30 my class is over. And I will sleep at nearly 12. So I need some sleep now. Need sleep at least to 6.5, 6:30. 6.5 hours sleep I need. I have to come and again start teaching. So for that matter, 6 is very early for me. Literally very early. One day we can plan it out if it is possible, if it is all possible. One day we can plan it out to watch till 6. We can start at 6:30 if everybody agrees. Uh, if okay, then 7:30 is optimum time for me personally. Optimum time. I do have time to make up tea for myself, drink that, and come for class. 6:30 would. The class was good. Enjoyed a lot. Understanding and remembering. Perfect, Harish. Now, your duty is to share with everybody who wants to pursue, who wants to complete income tax in this less time, in this funny, enjoyable, and remembering manner. So, thank you so much, guys, for coming. I really enjoyed this session. Uh, Honestly, I never thought that I could speak English for this long, but I was able to do it because of your support, and my cheeks are paining because of laughing. So, thank you so much. I really enjoyed. See you guys on second lecture on Monday. Same energy, excitement, and enthusiasm. If you have not enrolled, do consider enrolling. If you have not shared this class to anybody, do consider sharing. It would be of great help to me also and to any other student who is for DT classes right now in entire English. Bye bye. Signing off. See you, Rahul Satija. See you on Monday.